we're going through an inflection point right now, like we saw earlier this summer.
The economy is rolling over, the data's rolling over, and as hawkish as the Fed wants to talk, the markets are starting not to listen to it.
We don't really know how far and how fast inflation will fall.
A lot depends on what the Fed does. If the Fed slows down their very rapid rate of increase, will that allow us to avoid a recession?
We're still going to get a recession at some point, although maybe not right away.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on radio and television. We're in holiday mode. No, we are not. It is a busy Tuesday up to the economic onslaught, the data dump that we get tomorrow. The data dump this morning is the price of Bitcoin dumps. I mean, Disney's there. There's this story, that story. Maybe oil's a story. We'll give you full World Cup coverage. But Lisa Abramowicz,
you're really promising
guess
a lot.
What? Bitcoin front and center. Shanali Basak to join us in 15 minutes.
It's not just what we have seen in FTX. This is not just an idiosyncratic moment. We're also seeing it in others. We're also seeing the potential for a big bankruptcy that is much more substantial, with Genesis potentially filing if they do not raise funds. This is the Winklevi, as you call them, and how much you end up.
They're in the story, aren't they?
Yeah, with something that is more of a contagion event, a la Peter Scheer's comments yesterday.
Yeah, to remind people that aren't involved in crypto, Winklevi are two twins where women quake and stop in their tracks when they come into the Bloomberg building. And these guys are challenged, aren't they?
Well, I'm not going to weigh in on either.
The Winklevi, but
like, I'm not going to comment
they're
on that
challenged
one,
this morning with Genesis and the rest.
There is a question, an existential question of what's behind this. Is this an asset class that was built up during the era of free money that is coming down, and to what? And I think the question is, why have we not seen further fallout as of yet?
To bring you up to date, Robin Wigglesworth in the Financial Times publishing an hour ago a brilliant sum of this, quoting at length Shanali Basak in our crypto team reporting on Genesis, and we'll have that for you. 15,700 on Bitcoin after an ugly overnight as well.
Well, I will say that to me, the real tone is last week we saw a shift. We saw better than expected news out of China, better than expected news with respect to the energy story in Europe.
Not there.
Exactly. This week, we're not seeing the same thing. We're seeing worse news out of China with lockdowns affecting potentially a fifth of the entire economy. You're seeing a cold snap in Europe that's testing some of the resolve that we have seen in terms of how much buildup of energy they have. And we're not necessarily seeing the fallout in markets, right? There's still resilience. And so here's the question is, why are we not seeing more?
Because they're looking at the Fed and doing the parlor game out to December 14th, I would suggest. Our guest is so important today. We're going to get right to it with a data check and Lisa's brief. Futures up 8, as she says. There's a lift to the market. It's fractional. It's even 0.2%, including the Dow Jones Industrial Average. John from Doha emails in and says, Tom, more quotes of the Dow, please. The VIX 22.44. Yield, a little bit of a story today with yield coming in, maybe some of the angst that Lisa's talking about. Dollar churning after a strong dollar yesterday, and yen 141.30. And I got to go to oil, which is sort of all over the proverbial petrol map. 80.58 on American oil, up nicely here on news over the last 2 days as well. I need a Tuesday before Thanksgiving brief.
All right, well, let's talk about it. It definitely is a Tuesday before Thanksgiving brief. We do get a slew of earnings, including some retailers, including Dick's Sporting Goods, Burlington Stores, Analog Services. To me, I'm really interested to hear from Dollar Tree. Before market, Dollar Tree has done really well this year, up more than 24%.
Wow.
And this is typical because usually the dollar stores, the discounters, do best in a downturn. I am watching to see what their outlook is, given that people are downshifting in the face of higher inflation and lower discretionary spending. Today, the roster of FedSpeak. Yes, Carrie.
Dollar Tree, I've got to interrupt here. You go to TRA on the Bloomberg terminal. We got to sell the terminal today so we can pay for the bird. Dollar Tree, per year, last 10 years, 14.4% per year.
Yeah. And
no one guessed that. I didn't guess that.
No, and it really speaks to the tale of two Americas, which I think is really interesting.
I'm so sorry for interrupting.
Excuse
me, I'll never interrupt
It's the reality.
you again. Thank you.
Please, everybody just note that. He just said that he would never interrupt again. I'm going to hold up a sign every time it happens again, because it will happen again probably in this show. FedSpeak today includes Cleveland Fed President Loretta Mester, Kansas City Fed President Esther George, and St. Louis Fed President Jim Bullard. Tom, you were talking about how we were hearing the roster of Fed speakers perhaps moving away from a hawkish stance. I don't know. The interpretation of the rhetoric is the same that we've heard before. They're going to necessarily downshift, but that's not necessarily bullish because they're not going to go to a lower terminal
And we heard
rate.
from Citigroup yesterday with comments on Bullard tilting to 7% terminal rate. I think he's got to recapitulate that today and finesse what he meant by moving the markets with a 7% yield. I mean, that's a stunning statistic.
I mean, although he did move it for about a half a second and then it went right back down. So we'll see whose sort of narrative is the dominant one. And at 1 p.m., there is an auction. This one's a really interesting one, Tom. $35 billion of 7-year notes from the U.S. Treasury Department.
Why is the 7-year important versus the 5 and the 10? What is this, some in-between maturity?
It's a less liquid security. It tends to be a messier auction because there isn't necessarily. I'm not talking to you like you're a dummy. You're asking me why I think it's interesting. I'm telling you why I think it's interesting. I like the 7-year auction. Look at those yields. Nearly 4%. There's been a distortion here. A lot of people seem to like this area.
Okay, well, we'll go there. We'll give you the World Cup schedule in a minute. I'm looking it up. I think Argentina.
Did you watch yesterday?
I watched a little bit yesterday. That was fun. I mean, the U.S. game was like, wow.
They should have won.
Well, but Gareth's Gareth. You know, we've talked that for David Blanchflower to give us expertise on this in the coming days.
Unlike me.
On his wells. On Denmark, I believe playing today, Jens Nordvik joins us, founder and CEO of Exante Data. Come on, Jens, world stops, Denmark, Tunisia as well. What do you think? Denmark is really percolating with a chance here to make some noise.
Yeah, we'll hope they can do a little bit like England did yesterday.
Okay, see that terse comment there. Jens, let's get to it with the dollar. What is the 2023 view here on the dollar? There's been big figures moves this year. Can there be big figure moves next year?
So this year has been essentially one of the strongest in the history of the dollar, right? Massive run up against some of the biggest currencies in the world, like seeing the yen move and so forth. And then in the last couple of weeks, we've seen a big reversal within that bull move. And like our positioning indicators that we track at Exante Data have had some of the most extreme signals, right? Real money investors were very, very overweight dollars. All the trend following investors were really max long dollars. We had this very violent washout. So now everybody kind of has to decide, okay, is this really a big change in trend, or is it just some kind of repositioning in the market? And the repositioning was definitely a big piece of what was going on. And we could already see as soon as the news from China, which was actually quite important to the turn in the dollar overall, as soon as that is less positive, the dollar kind of looks like it wants to go back to the appreciating trend, right? So I think for me, the key is global growth. We can talk about the Fed, and the Fed is important, but the most important variable for the dollar is what's going on with global growth. And if we still have a problematic growth situation in China, if Europe doesn't recover, then it's hard for me to see that there's going to be a strategic turn in the dollar. We can have like wiggles, and we had a big wiggle now over the last couple of weeks, but a strategic turn requires that global growth is going to get better. And for me, that's too early to make that call. We can go into detail with that.
Jens, you were talking about China. And that was sort of giving some fuel to this risk appetite, the idea that perhaps they were tiptoeing away from COVID zero. It seems like it's the opposite today, and yet the narrative in the market is not cooperating. You're not seeing the off move in equities. You're not seeing a strengthening dollar. What do you make of this, the idea that a lot of the reasons behind the rally are turning on their head, but the market is not?
Yeah, so the first thing I would say is that there's been optimism around China, right? And the optimism was based on the notion that there was going to be a move away from zero COVID policy. And what we're seeing in China is that there might be a desire to somehow relax those policies that have had a disastrous impact on the economy. But is it really feasible, right? We now have cases that are skyrocketing. We have a population that has been told that COVID was very scary and something that should be avoided at all costs. And this could go on for a long time in the sense that they only have around, call it 20,000 cases per day, right? Like go back to when we had a peak in the United States, which is a smaller country population-wise, where we had 1 million per day, right? So this we're in the early phase of an acceleration, and this could go on for a long time. And are they just going to let it run? That's would be a kind of pretty strange way for them to go from one extreme to the other. So it's going to be a gradual, messy process here. I think it's going to be hard for the market to cope with that.
Although it seems like they're coping with it right now. Heading into 2023, it seems like the consensus is that you might see some more dollar strength, and then it will turn into dollar weakness. You will see Europe start to outperform. You will see Asia start to outperform. You will see the U.S. underperform. Where do you push back against the consensus right now?
Yeah, it all comes down to the inflation and the inflation expectations, right? We saw after the CPI print, one CPI print that was better than the trend we've had. Market rallied enormously. There was also after that the dollar had one of its biggest moves ever in a few days. So it really comes down to inflation. Have we turned the corner? Or we're going to have sticky services prices. I think it's pretty clear that goods prices are starting to normalize, but the market is also hoping that services prices will also normalize. If that's not the case, it's going to be a big problem for risk assets, right? Because that's being priced now that the worst is over inflation. If that's not the case, we're going to be back to having risk assets under pressure.
Jens, thank you. Go Denmark. Jens Nordvig with us. It's a sounding data. I want to point out again, he won the beauty contest, institutional investor, 3 years in a row in foreign exchange. I could say no one's ever done that. I may stand corrected on that. OECD out with a stunning look. Let's remind ourselves, Lawrence Boone nailed this always away. Inflation statistics, Lisa, still 6.8%. globally next year among OECD nations. That's not inflation going away.
And it's the theme of hiking into weakness that they really highlight. Perhaps not a recession, but pretty darn close, particularly in the developed world.
On radio and television, stop what you're doing. Next, Shonali Basek on Genesis. Good morning, Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Well, digital asset brokerage Genesis is warning potential investors it may have to file for bankruptcy unless it can raise money. Bloomberg's learned the firm is struggling to attract funding for its lending unit, which suspended withdrawals after the collapse of FTX. Now, Genesis has spent the last few days seeking at least $1 billion in new capital. The OECD says central banks must keep raising rates to fight inflation, even as the global economy sinks into a slowdown. In a new report, the organization warned that inflation and its impact on real incomes will only get worse if policymakers fail to act. It raised forecasts for inflation next year. In China, an increase in COVID cases has led local authorities into reintroducing measures like expanding testing and lockdowns. It's now estimated that a fifth of the country's economy has been affected. That's despite the central government's call for more targeted, less disruptive COVID-0 measures. Disney's returning CEO Bob Iger has taken his first steps towards reorganizing the entertainment giant. Iger has asked his top deputies to rethink the corporate structure. Meanwhile, he announced the departure of a top manager, the head of media distribution, Kareem Daniel. And the richest person in the world has seen his fortune decline by more than $100 billion this year. According to the Bloomberg Billionaires Index, Elon Musk's wealth has fallen to a little less than $170 billion after Monday's $8.6 billion loss. His stake in electric car maker Tesla comprises the bulk of Musk's fortune. Those shares fallen 52% this year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
I think we have one more big leg down in crypto. I think we're going to see some selling off in Bitcoin. I think one of the things that supported it recently are the fact that there are a lot of whales who have invested interest in keeping it higher.
Peter Scheer on fire yesterday. We went from Katie Greifeld with a reporting on FTX or FTX, whatever it's called, over to Peter Scheer. It was really quite good. Got picked up by the media. You know, he really did the job yesterday. Honest, are you any more knowledgeable on BitDog than I? I'm still not. I still feel really dumb.
The one thing that I will say is to conflate Bitcoin with the entire crypto universe
Yeah.
is a no-no.
I don't agree.
We'll get hate mail.
I don't agree.
Okay.
I don't agree.
Well, let's see if Sonali Basak
I
does,
think it's
because
an
I think
underlying.
it's-
John Farrell on assignment today in Doha, Lisa Abramowicz and Tom Keene. We're going to drive forward the conversation now. And for those of you who are Global Wall Street, it's simple. Lydia Bayud, Sonali Basak and company put together an important update on Genesis. Robin Wigglesworth 2 hours ago on the FT quoted that story at length here as we go into a movable feast of a difficult Tuesday for crypto. Ms. Basak joins us right now. What are you looking for to happen with Genesis this Tuesday?
If they file for bankruptcy, how far does that contagion also go? So you have Genesis Lending, which is that lending entity that had been kind of caught up in this liquidity crunch here in the Bitcoin industry. But it is part of the empire that is run by a digital currency group that is Barry Silbert, former Houlihan Lokey banker, a creator here of what was a predecessor to NASDAQ private.
Okay, we don't agree. She doesn't think Bitcoin's the underlying. I'm just adamant about this. There is an underlying to every transaction. How linked is all the basic chit-chat in the world you're in, what Katie Greifeld's doing, the rest of you, how linked is that to the price of Bitcoin?
Think about the freneticism over the last couple of days as Genesis sought to raise money for this unit. They were calling Binance, they were calling Apollo, and a lot of investors here were very concerned when they looked at it at the end of the day because they said, first of all, there are regulatory concerns here. Second of all, we're untangling all the contagion from the crypto industry. And third of all, it's like even investors here who wanted to get involved in the first place in this era can't get involved because of the aforementioned problems we've named.
I guess another way to ask what Tom is asking is we often look at the price of Bitcoin as a reflection of the contagion. Is that an accurate way of gauging out the weakness, or is this that haven almost amid the storm in more peripheral crypto assets?
The reason it's not an accurate way is because people put real money in to then buy Bitcoin. And so the idea here that there's not an onboarding here is a false conception.
A what?
And that it's not a real, it's not a fake asset that's flying in the ether. You pay money to buy Bitcoin. You use dollars to buy Bitcoin. You put your dollars in exchange. Let's take Coinbase's balance sheet, for example. It's $5 billion in cash, $95 billion in customer assets held one-to-one. People are worried about that one-to-one. Therefore, you have Coinbase bonds trading at 50 cents on the dollar, 51 cents on the dollar. So yes, to your point here, people are worried about the underlying, but these are still companies that if they're are underlying, people are willing to pay for them.
Why isn't there more transparency? There was a story today about FTX having actually more than expected reserves, right? That they had more than $1 billion of cash that they found, and people thought, wow, you have money to give to creditors. Why are we looking under rocks and in the cushions of a couch to try to find money for an institution that supposedly is real?
Yeah, and that's the important part. We're talking about the institutions now, not the underlying Bitcoin. And so when you're looking at FTX or you're looking at Genesis, people are peeling back the curtain here and trying to see what is this entity, who owes who what, and what did they do with that money.
But they're going into Delaware court today.
Yes.
Mr. Dunlop, he's an adult. The Delaware court is acclaimed, Mr. Musk learned that, for being adult. What are the adults in the room going to say to this unregulated, unaudited, offshore industry? I mean, the broader industry as well as FTX, whatever it is.
They're going to say exactly what they're saying now, which is how much money do you have? How many assets do you have? How come you don't? You want to?
They're going to treat them like adults.
They're going to treat them like adults.
Are they going to get adult answers?
They're going to try to. Yesterday, you had or over the weekend, you had a statement from FTX, and they hired Perella Weinberg, real U.S. investment bank, going back and looking at the assets, trying to figure out what assets they could sell, what assets they can recapitalize. And
I said this says a surveillance remote from the Bahamas is what it says.
I think everything
First week of December.
I think
or
everything
Delaware,
says surveillance.
Fifth Avenue.
Yeah, I think that surveillance in the Bahamas is what everything says. I am wondering, Sonali, as you talk, there is a rumor, and I don't want to spread rumors, but we've talked about it on this show before, that perhaps certain institutions are so entrenched in this asset class that they have a vested interest in not mass selling and in trying to keep things afloat and finding an entry point. So how much are you hearing about that? That basically there is enough commitment to keep it going for now until something further breaks?
A lot about that now, because you could argue that this wasn't started with FTX. You could argue that this started months and months ago when the cracks started forming in the Bitcoin industry to begin with.
Oh, come on, this started when it was 60,000 and went to say 40,000.
But how did it become 60,000? It was levered up to 60,000.
Okay.
That's the problem. And so now what you have is you have an instance where that leverage came off the system, 3 Arrows blew up, they had lenders, and now you had Genesis, which was also a counterparty here, that DCG had also poured money into to try to bring out of that hole, and now everybody is feeling the pain from that hangover.
How much surprise among the people who you speak to is that there is not more contagion, that there hasn't been greater fallout?
We're in the middle of it. The reality is neither Genesis nor BlockFi have filed for bankruptcy. We don't know who their creditors are, which means once we see more bankruptcies come to the surface here in the lending industry, and many of my sources say maybe crypto lending is over, which then you wonder where that floor is once again when you don't have leverage in the system, maybe at all for many, many years.
So is this going to happen today? I mean, it's Thanksgiving week. Their eyes are, everybody's sliding through the week given huge news flow. And are you saying today for Genesis in Connecticut?
They have said on the record that a filing is not imminent, but you have to wonder if part of the reason for that is because they keep on finding new people to reach out to. So we have reported Binance. We have said
Can they reach out to the big banks?
You can.
They
well,
can
the big.
try.
Yeah, exactly. And the reality is we've heard that Apollo is one of a number of traditional financial counterparties that have fielded calls here from Genesis. So now everybody's in it. Everybody is looking at the books. Okay. Everybody is thinking about what they can get if they get involved.
I'm watching the underlying 15,700 after a difficult 24 hours. A little bit of a bounce right now in Bitcoin. I'm not going to pontificate about what I see there. Technically, it's completely inappropriate. Sonali Basak, thank you so much. Congratulations on a story that was at the top of the pile for Global Wall Street this morning on Genesis, and Phil Collins is not involved.
I know what you're watching. You're not watching Bitcoin.
Hey,
you're watching Argentina versus
Sonali
Saudi
came
Arabia.
out and whispered to me, "OMG, Argentina's behind."
This is not what he's watching.
2-1.
Yeah,
and here it is, folks. Thank you,
analysis.
Fox. And we appreciate that. Simone Foxman giving me the inside story from Doha. Saudi Arabia is beating Argentina with 30 minutes to go.
Thank you, Tom.
I think, where the hell is Ferro? Sonali, where's John?
Actually, this is interesting because Saudi Arabia is way behind Argentina, and Argentina is the favorite. You've got Lionel Messi, who's going to try to come and claim his victory in his last World Cup.
Would you like to comment on this?
I'm not watching soccer today.
Yeah, I know, but he's going to mock me all day. He's going to try to make me, and he's going to be like, "Oh, she knows nothing."
Down
he's
in
right.
flames, Team World Cup coverage from Bloomberg Surveillance. Good morning. Bloomberg Surveillance, we say good morning to you with futures. A little bit of a lift here, fractional lift with fractional move in the VIX. The VIX 22.50 in from that 24 level. I guess that's a better tone to a market churning here, waiting for the economic data. What do we see? 78 statistics tomorrow, Lisa?
We see a lot of news. Yeah, exactly.
Something like 8:30.
In particular with Fed meeting minutes, which you've gotten some more that you can skim tomorrow. But I am curious how we get a sort of shaped narrative around how much inflation is starting to cool out a little bit.
I noticed oil with an elevation the last 10 minutes. Ukraine with an argument here with Gazprom over natural gas flow, and we'll have to continue to watch that. West Texas, $81 up from a 78 level, and Brent crude 88.63 drifts back towards a $90 level. We keep score at Bloomberg about who gets it right, who gets it wrong. We really pay attention to who gets it wrong and ask why. Always informative for Global Wall Street. We particularly pay attention to people that absolutely nailed it. OECD in Paris, compendium that large group of countries that they study and study and study, have nailed the global slowdown, the vector of it, the slowdown that we see, and they further drive that to a 2.2% statistic for real global growth next year. Alvaro Pereira joins us now, acting chief economist at the OECD, and of course with his Portuguese economics. And I'd also point out, Alvaro, your British Columbia cred, which tells me that it's all econometrics. How good are you now at OECD of guessing the statistic? Do you have a lot of confidence and degrees of freedom in trying to guesstimate out to 2024?
Well, Tom, it's a very challenging environment, but we have very confident about our forecast. We've been As you said, we warned about the slowdown. And right now we're saying that, listen, we are facing the largest energy crisis since the 1970s, and we have a dramatic picture that shows exactly that governments around the OECD are spending around 18% of GDP just in energy. And this is as much as we did in the 70s and 80s. And so a very challenging environment, so we feel very comfortable with our forecast.
With your GDP growth slowdown, from whatever it was in 2021 down to 3 point whatever, down to 2.2. How does China play into that vector?
Well, for China, we are remember, this year was the lowest growth for China since the 1970s, with the exception of the height of the pandemic. And we are forecasting China next year to rebound to about 4.6%, but going down to 4.1% in 24. But there's two risks that we think that can plague this central scenario. First of all, it's fairly possible that if the strict COVID lockdowns continue and they become more pervasive, then certainly growth is going to be a lot less than we are forecasting. And the second one has to do with the real estate market. If the adjustment on the real estate market is less smooth than we would like it to be, it's very possible that also growth will be negatively affected in China. So we are seeing a bit of a rebound in China, but risks are certainly fairly high over there too.
Alvaro, you pointed out that this is really an energy crisis, which isn't necessarily the way that everybody else would frame it. They would view it as a pandemic crisis. They would view it as a free money for decades kind of crisis that have come to a head. They would view it as an inflation crisis more broadly. Why do you view it through the lens of energy primarily?
Well, first of all, the energy crisis is a direct consequence of Russia's aggression on Ukraine, right? And so, which has led to lower growth and more prices rising everywhere. We see that even before the war, prices were starting to go up, so you're absolutely right about that. But clearly, inflation became a lot more pervasive, more entrenched, and also the pressures have intensified after the war. We have, I think, a very interesting estimation in our forecast, which is trying to see whether this is mostly because of supply shock or it's mostly a demand shock. Well, if it started as a supply shock right now in many countries of the OECD, you can see that it really right now it doesn't matter. It's demand and supply. In fact, in some countries like the UK, demand factors are now having more an impact than the supply factors. So right now what we're talking about, very large inflation in many parts of the world. Monetary policy has to continue to be decisive. It has to do what monetary policy has to do in order to get out of this situation. And I think we're starting to see some positive signs in some parts of the world.
So, Alvaro, you say that you think that probably China's economy will recover next year, which might actually increase demand for certain goods, including energy. How will this factor into how much developed markets have to be hiking rates, have to be countering that increase in demand, the increase in momentum that we see heading over from the East?
Well, what we highlight as well is that this inflation is having a tremendous impact on people's incomes, right? If all across the world we have a dramatic picture on real wages, and all across the world real wages are going down, and that's why we focus so much that right now, if you want to ease the pain, if you want the pain to be as short as possible, it is absolutely essential that we continue to be determined in this fight against inflation. If the economy starts recovering as we expect in the second half of next year, then certainly this will give a bit more pressures on prices. But I think as long as monetary policy is doing what it's doing and remains steadily fast on fighting inflation, we'll be able to have lower inflation going forward.
Alvaro, when Bloomberg Surveillance visits you at Sintra, Portugal for the ECB confab here next year, you're modeling out 6% global inflation. Every single central banker is going to say that's unacceptable. Do you perceive that as a stopping point, or do you have a different statistic where we get to a vaunted 2% Taylor perfection? What do we do when we get inflation down to 6.8 or dare I say 5%?
I think what matters right now is when we're going to have inflation peaking and coming down steadily. And so the trend is going to be very important. I'll give a good example. Brazil, when they started, they were one of the first countries to face significant inflationary pressures, and their central bank decided to hike interest rates very decisively for a few months, and now it's starting to pay off. I think the last reading we had also from the United States is positive. And so what we need to do around the world is exactly to assess the situation. Some countries have acted a lot more than others, but what matters right now is to get to a situation in which inflation peaks and starts to come down durably. It has to be durable. It cannot be only one data point. And this is what we need to monitor. In our forecast, we forecast that basically inflation will start to pivot around mid next year and will continue to come down, even though it will remain fairly high in some countries at the end of 23.
I don't want to get you in trouble, but I'm going to get you in trouble. With your academics and particularly teaching at the University of British Columbia, how do you respond to a central banker gaming out a 2-year recession as we got from the governor of the Bank of England? Do you have a confidence in establishing a real GDP view out 24 months, or dare I say 36 months?
Well, listen, in all these forecasts, you know and I know that all these forecasts, our best scenario, our what do we expect things will evolve. Things change. You know, nobody expected a pandemic 3 years ago. Nobody expected a war, you know, just a few months ago. Yeah. So things change. What I can tell you is that our forecasts, given what we know today, what we see in the data, we are fairly confident about our central forecast right now. But risks, as I said before, are rising. And so risks that think can go wrong are there. But right now, our central scenario is not a recession. Sluggish growth, but not a recession.
This has been wonderful. Dr. Pereira, thank you so much for joining us. Alvaro Pereira at the OECD with a really important summary. And we give this great focus, folks, because they've been so out front on the vector. It's all these institutions. And, you know, I go back to the World Trade Organization where you wouldn't expect this analysis. And they were really leading on global slowdown, maybe with a Pacific Rim view. And you get the same thing from OECD.
And it really highlights the uncertainty around inflation, right? Is it demand-driven? Is it supply-driven? Is it a bit of both? How do you understand what happens when China comes back online and how that factors in? You
know, people take shots at him constantly. The pinata known as Lawrence Summers. The bottom line is this is a stagflation analysis out 2 years. You've got nominal GDP of, let's round it up and be optimistic. 3 + 6 is 9% nominal GDP a year from now. No, I don't see anybody modeling that out.
And what's the counter impulse? Do you see fiscal spending? Do you see a monetary easing?
Well, that's,
at what point do we see some sort of response? And if we don't, then what? Because we have not seen this.
This is really, really good that you bring this up. It's well said, Lisa. And the answer here is Volkerts Landau of Deutsche Bank in February. I guess it's this year. No, 2 years ago. I can't remember now. But in February, Volkerts Landau was on the show and he said, you've got to see fiscal spending because of a war in Europe. And, you know, have we really seen that yet? I'm not sure we've seen that fiscal stimulus.
Well, we've seen it in Germany, and then there's been a lot of pushback elsewhere simply because of, you know, just the concern about inflation, the concern that they're not allowing them to spend as well. I see you distracted. Now, honestly, I have to be honest, it's a really good game. I was actually looking at it in the break, and
it is. She picks up my phone, and you know.
I don't pick it up.
I mean, we go from Saudi
Blaring.
In the 76th minute. Saudi is upsetting Argentina 2-1. Argentina's with some huge efforts here, but that gets to Jens Nordvig's Denmark and Tunisia, and you know, there's sort of like this basic Western world layup. Denmark layup. Well, says who?
Yeah, exactly.
After what we're witnessing here.
So Lionel Messi scored a goal in the 10th minute, and then the Saudi Arabian goal. The second one was amazing. I'm really impressed.
Pharaoh's probably watching this in a hotel room in Doha, tearing up.
Yeah, he's probably like, thank
oh my God, Lisa, with football talk.
No, he's actually crying for another reason when he hears me talk about football. It is notable, though, to see these underdogs come out and really push.
It's notable that on global television for Global Wall Street, two people completely unqualified are going at it. We're qualified to give you a data check. Futures up 2, the VIX 22.53. If you're brave, stay with us.
Keep Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. U.S. prosecutors had begun an investigation of FTX months before the crypto exchange collapsed. Bloomberg's learned that prosecutors in New York had started poking into FTX's massive exchange operations. It was part of a sweeping examination of cryptocurrency platforms with U.S. and offshore arms. U.S. Defense Secretary Lloyd Austin is urging China to avoid what he called destabilizing actions toward Taiwan. Austin met with his Chinese counterpart in Cambodia, their first face-to-face meeting since House Speaker Nancy Pelosi's visit to Taiwan in August. It's the latest effort to put the U.S.-China relationship on a more stable footing. The European Union's executive is designing an emergency natural gas price cap. Now, it's trying to avoid the kind of record high seen in August without risking the security of supplies. The European Commission will discuss the final shape of the so-called market correction mechanism today. And China reportedly is set to fine Jack Ma's Ant Group more than $1 billion. According to Reuters, that would pave the way for the end of a regulatory overhaul of the fintech firm. Beijing's crackdown on the private sector included the halt of Ant's massive IPO in 2020. At the World Cup, England, Argentina, and the Netherlands all won their first matches. Meanwhile, the U.S. and Wales battled to a 1-1 tie. England and the U.S. square off on Friday. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
As we work to bring policy to what we call a sufficiently restrictive stance, which really in simple terms means the level required to bring inflation down and restore price stability, we will need to be mindful. Adjusting too little will leave inflation too high, and adjusting too much could lead to an unnecessarily painful downturn.
Mary Daly of San Francisco. Can't say enough about it. There were some real terse comments here about the social consequences of how the Fed dances to December 14th and into the next year as well. It is the Tuesday before Thanksgiving. We're not struggling for news flow, and the news flow today is really about Bitcoin. The weight on Genesis. Sonali Basak, I thought, was wonderful here half an hour ago. 15,700 on Bitcoin. I usually don't quote that, but today it is front and center. A churn to the markets in equities, a churn to the market. Bonds yields come in a little bit after the quiet of yesterday. Oil with a lift here. We'll get to that in a moment. Brent crude 88.59 dashes again to 90. I'm struggling here, Lisa. What I'm not struggling with is to understand food, because Javier Blas has done terrific work at Bloomberg. The core commodities really aren't up all that much. And yet Lisa and I know that when I'm preparing to do stuffing in aisle 7 at the store, that it's really expensive. And you did the work on this as well.
Hold on a second, just surveillance correction. You are not preparing to make stuffing. You haven't prepared to make stuffing for the past 2 decades. But we will pretend that we are both trying to cook, because I can't cook either, let's be honest. But for those who do...
My stuffing tastes like diesel fuel, which is what this is really about, isn't it?
Well, that's exactly right. Diesel fuel also in short supply. Stuffing mix, year over year, increased 69%. Everything having to do with wheat is more expensive. And if you take a look at the Farm Bureau, they did a study, and it shows that Thanksgiving dinner is up 20% year over year, which raises a question of how much further it can go, how sustainable this is, and why. Kona Hack, covering all things having to do with Thanksgiving dinner. Perhaps she makes stuffing better than I do, because I cannot make stuffing. Head of research at ED&F Man. Kona, what's behind this incredible lift across the board in food prices, particularly when it has to do with wheat?
Yeah, I think it does boil down to the Ukraine invasion. We do know that the Black Sea, which is essentially Ukraine and Russia, they account for a quarter of all wheat exports globally. So the fact that for a long time, at the beginning of this year, exports out of this region was blocked, that caused havoc, absolute havoc. And it came at a time when there was dry weather issues in other key wheat producing regions around the world. You name it, there was Europe, there was parts of the US. So I think we had a big shortage, and globally stocks were at levels which you hadn't seen for a long time. It was very uncomfortable. So I think you're just seeing that reverberating across, commodities across the food chain have been very, very tight. And on top of that, the cost of shipping that stuff, the freight, has been extortionate too. So it's all leading to the food basket, which is ultimately today so much more expensive for the average shopper.
And Tom was talking about diesel and how that really is behind this. And that really speaks to the shipping story, the idea that even transporting the food is getting more expensive. Are there any signs of disinflation, of some sort of relieving of this pressure in the near future, or is it more of the same and even then some?
So diesel is absolutely critically tight right now. I think Russia is a massive exporter of diesel to Europe, and there seems to be critically low levels of diesel stocks around the world. But just going back to the food itself, what I would notice is that the United Nations FAO Food Price Index, that actually peaked in March. Yes, it was at record high levels at that point in March 2023, but since then it has been steadily coming off. Now, that's at the absolute futures price level when prices are at those highs. It takes a time for it to filter down to the supply chain and now ultimately to the retailer. So that's going to take a while to filter through. But I would say prices have peaked. One thing about agricultural commodities is that farmers are very responsive. So when you do see high wheat prices, farmers will do everything to plant more of that crop. As long as weather's permitting, they will plant more of that as soon as the next harvest.
Keene, I've been dying to talk to you, and this is the global reach of ED&F Man, and that is, if China extricates itself from its misery and we get a Pacific Rim restart, or dare I say boom, what does that do to the Keene world?
So that is the big story, if you like, that commodities are desperate to look forward to. It really will have an impact. And every time, when rumors were coming out that China's about to lift its COVID zero policy, or even going some way towards addressing some of that, commodities have been rallying. So it really is the one thing that can really help things take off. I don't think that's going to happen until Q2 of 2023 at the earliest. And we've seen actually an exponential increase in cases most recently. So that's always causing short-term damage. But yeah, the hope that they will eventually open up, we'll see what we saw in Europe and America, where pent-up demand for going out, eating out, restaurants, things that you couldn't do in lockdown, we'll definitely see a short-term bounce. But you have to remember one thing about China. The structural story is that China is no longer as commodity intensive and hungry as it was, say, a decade ago. So the drive will not be as extensive. There will certainly be a short-term bounce, and that'll be very beneficial, but it will not be long-lasting, unfortunately.
Keene, thank you so much. Greatly appreciate this morning with ED&F Man. I want to squeeze one more question in there. Always informative, but we just can't do it this morning. Just really interesting there in food. We make jokes about this, but this is real hardship. I mean, I remember I did a whole thing on rice for Bloomberg on the economy, Lisa, years ago, and it was the cost of food in America, I can't remember what the number is, 8, 9, 10%. And in Cambodia, the cost of food is 60 and 70% of the paycheck. We make jokes about it, but even in America, the percentage of people flat on their backs from this food inflation is arguably, to me, bigger than the gallon of gas inflation that's out there.
And you're seeing that in terms of discretionary spending and in terms of consumer sentiment, how much that's deteriorating into the winter months. I do wonder, when you talk about whether this is supply side driven or demand side driven inflation, what rate hikes are going to do. Right? I mean, this is the question. If we don't necessarily get some sort of increase in the production of oil, what does rate hikes do other than make it more difficult for people who are at the lowest deciles of their income sphere to be able to afford it? I don't know. These are some of the things that I expect that we'll keep hearing from Fed officials. And we heard also overnight from ECB members as well.
Well, I like what Mary Daly said, and she's always had a real focus on the broader America, as have all the other Fed officials. And if you want to see it in Turkey, what's a butterball cost at the store? I don't even know.
I just know that
15,
I can
20
give you the
bucks.
statistics from Farm Bureau because that's what's up in front of me
Right.
right now.
There we go.
Turkey is $28.96 for a 16-pound turkey, which is
Okay.
an increase of 21% year over year.
D'Artigan, which is just phenomenal, like fancy turkey stuff. The wild turkey's $95.99 for one bird. And that's a sprawl of America. We spend too much time talking to people spending $70 on a beast, and there's a whole bunch of people out there looking at 30, you said?
Well, but how many of the people who previously were looking at 70 are going to 30, which is the reason why Walmart perhaps gained share, with people perhaps migrating lower in terms of the price savings.
Just in, Ferro cooking for Thanksgiving. Can you see? Yeah, can you see him? I can see John, basting the beast.
Lemon gelato for dessert. And,
Actually, that would be good.
Yes.
That would be better than what I'm going to do.
What are you going to do?
Bitcoin up. I'm going to survive Bitcoin. This is Bloomberg. Good morning.
We're going through an inflection point right now, like we saw earlier this summer.
The economy's rolling over, the data's rolling over, and as hawkish as the Fed wants to talk, the markets are starting not to listen to it.
We don't really know how far and how fast inflation will fall.
A lot depends on what the Fed does. If the Fed slows down their very rapid rate of increase, will that allow us to avoid a recession?
We're still going to get a recession at some point, although maybe not right away.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on a Tuesday before Thanksgiving. Yes, it is quieter, but it is not. In this hour, in moments, what do you do for 2023? We'll dive into that with a cautious view with Wells Fargo. John Ferro on assignment right now with Argentina, stunningly on the edge of losing to Saudi Arabia. Mr. Ferro will report on that through his our inner messaging system as well. Lisa, all the news today, it's really sort of comforting to get back with Tracy McMillian, back to what do we do for 2023, away from Disney blowing up or Bitcoin blowing up?
Well, the problem is that we have to get through Bitcoin blowing up or Disney having a huge management shift in order to get to 2023, and nobody can really game out how that's going to go. I mean, the one consensus that you're feeling in 2023 is, and I love how George Saravellos put this yesterday, it's unlikely that so many bad things can happen all at once the way that it did in 2022.
And what's interesting here is the rare optimistic call. There are people out there looking for a constructive 2023, buttressed up against OECD this morning, folks. And all you need to know is the migration on real GDP growth is Bank of England-like. And the migration of inflation doesn't get it done down to 6.8% global inflation next year. All of a sudden, you and I are looking out to 2025.
Yeah, hiking into weakness, saying that there's a need to really keep hiking in order to crimp some of the demand and get inflation down. You're talking about bears, right? I'm going to throw out one that's sort of notable. Marko Kalanovic over at JP Morgan, almost full capitulation here, basically saying that the only way to have a sustained rally in asset prices is for the Fed to start cutting rates, and he doesn't see that happening in the near term. This is somebody who has been a perma-bull for so much of the cycle, basically coming out and saying, I'm done. It doesn't seem like it's in the cards right now.
Well, we're going to see that. We're going to see a lot of 2023 resets. We're going to do that with Wells Fargo here in a moment. But my reset is just there's mass uncertainty. Let's talk about Bitcoin this morning. This is the lead story this morning, advanced by Lydia Bayoud and Sonali Basak and company at Bloomberg. On Genesis, Genesis is not FTX, right?
It's considered to be perhaps a little bit more with respect to institutional money. It's the Winklevoss twins. It's a lot of people who thought of this as much more stable.
Stablecoin.
Whoa,
I love it.
Look at this. It's almost like we're on the same page.
I have no
it
idea what
happens once in a while.
stablecoin is.
Well, we could discuss that another time. There is a bigger question here, which is where are we in the fallout of the crypto turmoil? Sonali Basak saying we're in the middle of it. How much more do we have to see, and how much is this a symptom of what we've seen in terms of the withdrawal of easy money?
Stay with us through the day, and I believe, correct me wrong, Amy, on this if I am wrong, but we have crypto this afternoon where we'll really dive into this with a complete effort. We're going to look forward to that.
She says you're correct.
Television this morning. Am I correct?
You're right.
She just talks to you. She doesn't talk to me. What can I say? Futures up 4 Dow. Futures up 44. Bonds, there's a movement today after yesterday's quietude. Yields come in a little bit. 5%. We were looking for the 2-year yield to get out there. It did not. 4.50% on the 2-year. 10-year yield 3.79% as well. 2s10s gives me nothing. And the real yield in a little bit, 1.46% on the real yield. Oil with a lift, 88.71 on European Brent crude, global Brent crude, back towards $90, and dollar churning today is not much of a story. I demand a pre-Thanksgiving brief.
All right.
With Lisa Abramowicz.
Fine, if you insist. Let's talk about what we're looking at today, including a slew of earnings. We already got some of them, including Burlington Stores, Dick's Sporting Goods coming out. Dollar Tree is what I am watching. How much do you see an ongoing flight to some of these discounters because of this feeling that people want to downshift, given the fact that Dollar Tree is up more than 24% so far this year? Just this is the winners that tend to emerge during downturns or soft patches in the economy. Today, the Fed Speak includes Cleveland Fed President Loretta Mester, Kansas City Fed President Esther George, and St. Louis Fed President Jim Bullard. Do we get a shift in tone? Do you start to hear about concerns about the lag effects? And that's something that sort of people touched on yesterday.
And the last hour I didn't talk about this. And keep this up on television and radio. We're looking at the three mugs of Mester, George, and Bullard. And this is the strength of the Federal Reserve System. When down on Madison Avenue, the country went broke in 1907. And in 1912, we started the Fed Reserve, modernized in 1951. And the heart of it is the regional presidents are different and independent. And what I love about what you're saying, Lisa, these are three starkly different voices today.
And the one consistency is inflation is the first and foremost concern, and that rates are going to go higher before they hold put. At 1 p.m., we get an auction. U.S. is planning to sell $35 billion of 7-year notes. These tend to be difficult auctions because they are less liquid than other parts of the curve. The yields are higher, 3.89%. What is the demand like? I mean, it just gives you a sense of where we have been, considering the fact that we were near zero and not so long ago. Going up almost 4 percentage points is sort of shocking.
And now the dumb question of the day, is there tax loss selling in bonds?
Not to the same
Not like
degree
stocks.
as stocks.
Okay.
So it's not going to be affected in that kind of manner, especially because there's a huge international investor
We
base.
do lots of fancy stuff here on equities, bonds, currencies, commodities, but part of it is to get back to basics. Tracy McMillian is in charge of basics at Wells Fargo Investment Institute, is head of global asset allocation strategy. Tracy, let's get out front of your view next year. What do you see for use of cash in 2023?
Sure. So good morning, Tom, and thank you for having me. So for 2023, we're actually seeing equity markets move higher, but it's going to be a really tricky path to get there because the Fed is likely to be, under 3 different regimes as we move into 2023. We start the year with them continuing to tighten. Then we think we're going to see a pause. And then we think by the end of the year, they're going to be cutting rates as we move through a moderate recession. So we think the markets are going to be looking out to 2024 by that point. And we see about 10% upside from here. So we would cautiously be dollar cost averaging into equities. We're also starting to take a little bit of risk in fixed income by moving out in duration.
Tracy, how concerned are your clients right now? How much fear is there?
So there's some fear, but I would say with relation to other downturns, the 2008, 2009 financial crisis, even the pandemic, we're not seeing the same level of fear at this point. Now, that doesn't mean we won't see that eventual fear and capitulation that we do tend to see during bear markets. But this has been a really well telegraphed bear market, and it's been very orderly so far. So we really haven't seen that kind of fear from our clients that we typically see during a bear market.
We're going to hear from a host of Fed speakers. Later this month, we are going to hear from Fed Chair Jay Powell, I believe on November 30th, at a Brookings conference. What are you looking for to understand what the pivot point will be in terms of not just pausing rates, but actually starting to cut?
Sure. So what we're looking for is inflation to start to come off the boil. And we're starting to see that with the latest inflation data. We're starting to see it in goods data, maybe not so much, at least from the CPI in terms of services. And the services inflation is really beholden to this tight labor market. So we're watching the same things the Fed is watching. We're watching inflation data and we're watching the labor market data. And it's really going to take both of those cooling before we think the Fed will start to cut rates again.
Tracy McMillian, thank you so much with Wells Fargo. Greatly appreciated this morning. It's the stories for 2023. And, I'm going to give John major credit on this. And I think it was 3 years ago where John coined the idea that the outlook for a given year starts in March because there's just so much uncertainty now. All the confidence is gone.
But how much is it reset in March, then reset again in June, then reset again in September? I mean, it's a quarterly annual
But this is
report.
pre-pandemic I remember, I can't remember the ad slogans. We believe.
Well,
there was always with his voice and someone with a bow tie.
Okay,
we would suggest.
It's a problem because the market tries to get ahead of everything. So they try to game out the entire year in the first quarter. And then you have to reset and go to the next year that's jammed into another couple months.
I would suggest what we haven't talked enough about, and I give the whole show, our team and everyone credit for this, Lisa, is your world. When we cavalierly say bonds are down 15% in price, you can use the word never. We've never seen this. And grizzled veterans who remember 78, 79, that was a walk in the park compared to the rationalizations at 12/31/22 that are going to be made among old and quiet money.
It's been the worst year on record for benchmark treasuries. Yeah. This is the way of saying it. I mean, when you take a look at benchmark bond indexes and see them in a bear market, this is unheard of, right? And so this is the reason why sometimes you're a bit skeptical of the incredible optimism that people have about bonds next year. They say, well, this is the time to buy. It's a great time for bonds. And you're like, really? You guys just suffered the worst losses ever in your existence. How much, though, have we seen the fallout from this? And this is what, when you say my world, is it possible to have the benchmark full faith and credit safest instrument get totally blown out and not see anything blow up?
The great David Goldman, who was at Bank of America, wrote a chapter in my book years ago precisely on this, and that the mistake is to watch the doom and gloom tranches. And Margie Patel yesterday agreed with Mr. Goldman that you watch quality out there to see what it does. The quality's pulled back 15%, and you see if that recovers here. There's a bet on that, wouldn't you say?
A lot of people are betting on that pretty vociferously, saying that next year is going to be the best year for a long time in a lot of these credit
instruments. We've heard that before. Break exclusive, surveillance break exclusive. My bracket has been blown up. I am so done. We're like a day and a half into the World Cup.
You were all
a day
in
and
Argentina?
A third. I was all Argentina. I am so gone. Saudi Arabia, stunning Argentina. Stay with us. Jens Nordvig's watching Denmark. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Digital asset brokerage Genesis is warning potential investors it may have to file for bankruptcy unless it can raise money. Bloomberg's learned the firm is struggling to attract funding for its lending unit, which suspended withdrawals after the collapse of FTX. Genesis has spent the last few days seeking at least $1 billion in new capital. In China, an increase in COVID cases has led local authorities into reintroducing measures like expanding testing and lockdowns. It's now estimated that a fifth of the country's economy has been affected. That's despite the central government's call for more targeted, less disruptive COVID-0 measures. The European Union's executive is designing an emergency natural gas price cap. It's trying to avoid the kind of record high seen in August without risking the security of supplies. The European Commission will discuss the final shape of the so-called market correction mechanism today. Bob Iger will be paid about $27 million annually to return as the CEO of Walt Disney. The two-year deal includes a base salary of $1 million and a bonus equal to that amount, as well as stock awards with a target value of $25 million each year. The amount is actually lower than past packages. Former CEO Bob Chapek received $32.5 million in fiscal 2021, and Iger, who was chairman at the time, received just over $45 million. The richest person in the world has seen his fortune decline by more than $100 billion this year. According to the Bloomberg Billionaires Index, Elon Musk's wealth has fallen to a little less than $170 billion after Monday's $8.6 billion loss. His stake in electric car maker Tesla comprises the bulk of Musk's fortune. Those shares have fallen about 52% this year. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
There could be a growing split between what you might call American economic pressure on China, almost economic warfare, and Europe, led by Germany, looking to China in many ways to compensate for the loss of economic ties with Russia. If there were a crisis and the United States wanted to introduce sanctions, I could imagine a big transatlantic split.
Richard Haas of the Council on Foreign Relations, just brilliant yesterday on the linkage of our diplomacy, our foreign policy, with our domestic policy and the uncertainties moving forward. Lisa Abramowicz and Tom Keene with you. John Ferro on assignment. Denmark, Tunisia coming up as well. Futures up 8, Dow futures up 68. I'm going to call it just like stocks are open today. Futures are open. We'll see what happens. Yields come in a little bit. And Lisa, that's sort of the growth angst that's out there.
Yeah, and this concern about how far the Fed can go. Can I just say, you keep trolling John. You basically keep implying that he's like just ditched us to go watch the World Cup. So we'll find out. Hopefully he'll come back and give us a full report.
He'll give it, I'm sure, and a more intelligent report than we'll ever do. We know
100%.
That for certain. I like to say that my bracket is completely blown up with Argentina losing. It's sort of like, March Madness. I'm sort of out of it, like
immediately.
With the 64 in that. He's been so loyal. Enda Curran joins us now, Chief Asia Economics Correspondent. And I'm as guilty of this as anybody. I say I've been to China. And I've been from the airport in Hong Kong to the Mandarin, or, maybe some fancy Bund hotel in Shanghai. In China right now, it's getting serious. Chongqing is in Sichuan. It's 800 miles from Hong Kong. It is one of the 4 city-states of the People's Republic of China. Tell us about the quality of the COVID lockdown we see in inner China this morning.
Well, look, it's getting worse by the day, Tom. China's COVID cases are surging. We had a top health official, Sun Chunlan. She went to Chongqing today. She's a kind of Chinese equivalent Dr. Fauci. Now, what the authorities are trying to do is they're trying to thread this needle about not enforcing mass widespread lockdowns that we saw, say, in Shanghai earlier in the year, but they're trying to do more targeted restrictions on the ground. It's not just Chongqing, also beside us here in Hong Kong. Guangzhou is the other epicenter of this outbreak. But obviously the question is asking, that the officials are obviously asking, is how are they going to do that? How can they control this outbreak without going to the kind of draconian measures? So Nomura reckons around a fifth of China's economic output is now being hammered by the latest COVID restrictions and COVID testing that's going on. So it's all heading in the wrong direction for COVID zero.
Over the last 50 years, the city-state reality of China is that the mayors, the leaders, the generals, if you will, of each given city have a voice, and they're very powerful. Have they been quieted by President Xi, or can they give him an urgent response to, hey, this is what, is happening in our city?
Well, there was a recent plan delegating more kind of authority to the local level authorities, Tom, to your point, allowing them to respond to COVID as they best see fit. But of course, the instruction was also you're not to lie flat and they have to continue to control the virus. So obviously our own colleagues in Beijing and Shanghai are reporting the question becomes how can they pull that off? How can they allow the economy to breathe while also controlling the virus without kind of draconian restrictions that are being forced through? So this is the big dilemma. I think there is a feeling now among China watchers that China is heading into a very difficult few weeks. It's going to be probably the biggest test of COVID zero since the pandemic began. Nomura also out today making the point that China's hospital network in terms of ICU beds and the like isn't as good as your Taiwans, your South Koreas and Japan. So there's a real critical couple of weeks now facing China on this policy.
And here in the U.S., there also is a bit of a COVID wave, although there's enough immunity that people kind of shrug it off. And I do wonder, as people gather for Thanksgiving meals and prioritize getting together regardless of any health concerns, what the social unrest is like, the social pushback in China amid another round of shutdowns.
Well, look, again, as you well know, Lisa, it's hard to be too scientific, but open source social media does suggest there's a lot now of fatigue, exhaustion and maybe resentment towards the ongoing COVID zero restrictions. We had some analysts on Bloomberg TV today in Asia Hours making the point that people are fairly tired by the ongoing restrictions as it is. That's obviously understandable, but the whole crux of the issue is how does China navigate away from COVID zero without having a fairly serious public health disaster on its hands? And that's the big challenging act here. How can they navigate to get the vaccination rate to where it should be, either with Chinese-made vaccines or Western-made vaccines? And then how can they, of course, keep the economy ticking over when you have an exit wave from COVID zero? And other countries in Asia who came out of COVID zero went through a pretty rough time when they were pulling out of it in terms of worker shortages, supply chain disruptions, and everything else. So it's not going to be simple for China. A lot of economists today, Goldman Sachs included, were making the point that it's going to be a very slow, torturous process for how to navigate out of this.
That said, almost everyone who I've read believes that China will make its way out of this next year. This is the consensus trade, that you will see outperformance in the world's second biggest economy because of how low things have been this year and because they have to start the process. Can you connect the dots and all the things that have to go right to get there to make sense of this consensus call?
Yeah, it's because expectations have been so low, Lisa. It's probably not too hard to see how China could at least recover somewhat from here. As you mentioned, if they can navigate out of COVID zero in a somewhat controlled fashion, obviously the consumer will be ready to go, pent-up demand, just like we've seen in every other country around the world. Goldman Sachs thinking that will happen in the second half of next year. But don't forget the real estate side of it. Real estate slump, accounting for almost a quarter of economic activity. You know, as we've said before, economists say that the recent measures to shore up the real estate sector are a game changer. So there is a scenario where we could get into, say, mid next year, where maybe China's navigating the COVID side of things better than it has been. Maybe the real estate sector has found its feet, and China's getting up and running again.
Enda, thank you so much for your work each evening for us from China. Enda Curran running all of our economic analysis from Hong Kong on the Pacific Rim. I want to do a victory lap for one L. Abramowicz. Bramo killing it yesterday on the Equity Watch, a rare and difficult thing for her. Your interview with one Peter Oppenheimer really got some major traction out in the media. People talked about it as well. Ian Lingen in Bonds publishes moments ago, a plethora of unknowns is what Ian Lingen sees. And Oppenheimer sort of said the same thing in the equity space, right?
Which is a reason why they say kind of meandering performance for a while. But the meandering performance ends up leading to something where there are new highs later on in the existence of the stock market, but just not next year.
Does he participate in the market now, or is Goldman Sachs London in cash?
Participate in the market. It seems like there are pockets of opportunity. This is the consensus also, right? It's sort of, where is the leadership going to go? There's still areas that are going to perform. It's stock picking. It's not necessarily going to be a wholesale kind of catastrophic moment. He also pushed back against the Mike Wilson view that we could see 3,000 on the S&P. He doesn't see that as necessarily being in the cards.
Oh, it's interesting, and we'll have to see how everybody recalibrates. I get the feeling they're going to recalibrate into this Tuesday, into Wednesday. They will not be recalibrating on Friday, although Lisa will on Friday. Please pay attention to Bloomberg Surveillance on Friday. Her guest for the entire Bloomberg Surveillance, Damian Sassower, long overdue on emerging markets into next year. The markets, the futures are open. Futures up 9, VIX 22.43. We're watching oil, Brent crude moving to 90, 88.58. Good morning. Good morning, everyone. Bloomberg Surveillance, Lisa Abramowicz and Tom Keene. Thrilled you're with us here on an eventful Tuesday. Shonali Basak scheduled to be with us, I believe, in the next hour. She and her team are working with Lydia Bayoud here on their important story on Bitcoin, on Genesis. We're watching that very carefully. Bitcoin, I'm going to say, and I'm speaking as an amateur, ugly 18 hours, comes back nicely, 15,800 on Bitcoin now, up 120 points. John Farrell is on assignment here. And Lisa, I think we're 30 minutes away from another game.
I think so, and people will be watching that one. And the last one was really good, actually. I was looking at some of the highlights.
It was amazing, and it went for like 101 minutes or something because they get hurt and they have to play 90 minutes. I think that's the rule. So they play out longer.
I think John actually took off specifically so he did not have to hear us talking about the World Cup, and so he could just, focus on the game and people who know better than us. I'll give you a sense of what I'm watching today, just in terms of some specific companies and the earnings roll that has been going on. Best Buy coming out with better than expected earnings, sort of shocking because it was all online, and now people are coming back to the stores to buy tech, to buy other things. They actually reinstated a dividend. They increased their dividend, and they talked about operating income, meaning that it will be slightly higher than expected for the current fiscal year. You're seeing those shares up more than 7%. Zoom shares down sharply after disappointing earnings yesterday. They reported their slowest quarterly sales growth on record. They also cut their full year forecast. This really goes to the whole, are we post-pandemic? Are we ever going back to Zoom? You never were on Zoom.
I thought it was such a high point to have Dana Telsey with us, but you follow this more than me. It's highly idiosyncratic. Am I right about that or wrong?
It is. You mean in terms of the tech story?
Retail. No, the retail. The whole tech retail thing. It's just stock by stock right now, it seems to me.
It's about inventories and what people have done. It's about the mix of customer. It's about the type of product.
Yeah.
What the one unifying feature is that the discount stores have done well, right? We've seen that with TJ Maxx.
Sure.
We've seen
TJ
Maxx, right? And we've also seen online not fare as well. Amazon not doing as well. Even Walmart, the online sales didn't do as well. It is in-store purchases that people are really going for.
Do you have the thing where you're in your living room and you go, Athena or whatever it is, Amazon?
Alexa.
Call Ferro. What's it called, Alexia?
Alexa, have you ever seen
Do you have one?
Yes, I do.
You really have one?
I genuinely have it. We've already gone over this. I occasionally ask it to tell jokes to my children so I don't have to.
Are you serious?
Engage. Oh, the other stock I was going to look at was Dell Technologies, not to shift the topic. Dell Technologies shares.
Back to this.
What, that I have an Alexa or that I've asked it for jokes? Their jokes are actually so bad they're funny.
Here's a Bramo in the living room. What's it called? Alexia?
Alexa,
what did the 7-year auction do? Right? They're going to get rid of it all. That's the rumor.
What, that they're going to
eliminate Alexa or
they're
whatever?
Eliminating a lot of the staff tied to some of these issues. I don't know that they're going to eliminate that. But I will just say Dell is slightly lower after cutting their revenue forecast.
Is there other stuff coming out today? I mean, everybody's racing into Thanksgiving. I guess it's,
You mean the earnings?
Yeah, earnings.
Yeah, there's some earnings coming out.
Okay, well, very good.
Gone over them before.
Futures advance up 11 off that data check. There's no question about that. Dow futures up 80 points. We did that for Ferro as well. In the spirit of Denmark, Tunisia, we had Jens Nordvig with us of Denmark. Of course, all of his good work in foreign exchange. And we now go broader to the Baltic Sea and east to Anders Persson, Chief Executive Officer for Global Fixed Income. We make note Sweden is not in the World Cup, but then he will nod to Denmark here in a moment. What is it like, Anders? Explain to our American audience, particularly those that are not into soccer, you don't make it. Italy didn't make it. Sweden didn't make it. Is that a big deal, actually?
It's a big deal, yeah. So, I mean, I think any, particularly European country, but probably any country maybe outside the U.S., when your country does not make it to the World Cup, it's a big deal, and we have to quickly figure out what other country you're going to start cheering for. So
that's like the heritage.
I'm naturally, of course, cheering for the United States, but Denmark is my second go-to here now when Sweden didn't make it.
Well, the heritage in Nuveen, that's really important because of Chicago. The Chicago Cubs didn't make it for decades, so it's good to see as well. What is the 2023 view you have? Can you acquire bonds here for higher bond prices, lower yields?
Yeah, we are becoming increasingly more constructive on the bond market here as we're moving into 2023. I think our view is that the bond market is pricing in more and more of the uncertainty here, and more broadly, kind of the volatility uncertainty we do expect to continue for the rest of the year. But as we move into 2023, when the Fed hopefully starts kind of slowing down their hiking, hopefully maybe wrapping it up, we do think that that's going to be a good time to really start legging in further into the broader fixed income markets. I think the spread widening could start a little bit here, and we could retest some of the wides perhaps, but the yield levels are very interesting. The income opportunities are very, very real. So while we're a little cautious near term, we're really focusing on that income generation part of fixed income. The vast majority of fixed income returns comes from income, as you guys know, not capital appreciation. So when you can have these entry levels for investment grade corporates at close to 5%, high yield at close to 9%, It's starting to become very interesting, and we actually think it's a bit of a sweet spot from a broader asset allocation compared to equities, compared to some other options as well.
A lot of people would agree with you, Anders, and I want to go broad and I want to sort of get existential because it's ahead of the Thanksgiving dinner and I want to board my kids with some bond existentiality. And there really is this issue where the Fed raised rates far beyond what anyone had expected. It didn't cause a massive blow up. It didn't cause a massive cascade of defaults like so many people had thought. And now we're talking to some people about potentially the best investing experience ahead that they could imagine in bonds. Can you square that? How the Fed could raise rates so much and not cause some real damage to a corporate debt sphere that blew up over the past 2 decades?
Yeah, I mean, I think I would say we can't count on that completely just yet. As we're sitting here today, yes, that certainly is the case, and bond markets and credit markets are holding up quite nicely. We still have, the uncertainty of a Fed policy era. If they continue to be aggressive and too aggressive, that could change. It could change quite quickly. That's not our base case. We're expecting sort of a mild recession next year, and we're expecting the credit market's going to hold up quite well. As I mentioned, we see a little bit of spread widening potential here, but we're not expecting a total blowout. But yeah, I mean, these are unique times and unprecedented times. I know we keep going back to that, and I think that's the part that the market is trying to handicap. How different is it this time, and how will this play out next year? But ultimately, when we take a step back, we are finding the fundamentals are holding up okay. Obviously, they are deteriorating. Earnings are seeing some pressure, as you just touched on.
Yeah.
But it's not like things are falling off a cliff. And I think that's the comfort that we're seeing, that companies are coming into this prepared. They have pushed out the maturity wall. They are very focused on making sure that they're preparing for tougher times, which is unusual. Usually when you're facing a recession, it comes sort of out of nowhere, and that's the unique time that we're dealing with this
Anders,
time.
how much does your bullishness hinge on there being some sort of recession next year? And I say this because if there's not, then the Fed's going to keep hiking rates, and you're going to get that much more pressure on this space. How much are you counting on that?
Yeah, we are sort of counting on a mild recession next year. We don't think a soft landing, it's not impossible, but I wouldn't call it, at least my base case at this point. So there's going to be, almost like the Goldilocks will be some very mild recession that keeps the Fed comfortable that they've done enough, particularly on the inflation side. We sort of need to see the labor market having some cracks, not too much of a crack, but
Right.
some type of crack. And that would be sort of the best case scenario in my mind, that we see a little bit of this slowdown in inflation, or a fair bit, let's call it,
Right.
but not a complete fall apart at the same
Anders,
time.
very, very quickly here, the foundation, the heritage of Nuveen is municipal bonds. Is there value now in municipal bonds versus taxables?
Yeah, we're definitely finding a lot more opportunities on the muni side at this point. It's been a very challenging year. Flows have been very negative, but we take a step back. Credit stats are very, very strong. Risk reward, we think, is increasingly attractive. And munis, we think, is a good risk reward all in all. It should perform quite well in a variety of scenarios, particularly in a sort of moderate recession next year. So yes, overall,
Right.
we find good value in that space.
Anders Pearson, thank you so much. And we'll get you out here 20 minutes before the people to the west take on Tunisia. Anders Pearson of Sweden and Nuveen, thank you so much for joining us this morning. Lisa, this conversation coming up, folks, we're selfish on this. It's New York. It's on the edge of cold. It gets warmer the next couple days, but nobody has briefed us on New England, New York City, New York Harbor hydrocarbons like Stephen Schork.
Yeah, and the fact that there really has been incredibly low inventories of diesel, which you've seen that divergence between diesel prices and gasoline prices, and how much that's going to become an issue heading into the winter.
And this is about, it's not about, folks, the war in Ukraine, Russia, Saudi Arabia beating Argentina. It's about distillates and not in my backyard. Am I right on that?
A big part of it. Yesterday was really interesting. Did you see the price action yesterday with prices
briefly,
just
please.
plunging in the crude space and the Brent side of things, falling below $85 a barrel for the first time since September on this Wall Street Journal report that OPEC Plus was considering increasing production, sort of a nod to the Biden administration. OPEC Plus came out, denied it, and now prices are flying upward. How much is that really the swing factor at a moment of real tenuousness about demand and supply?
I mean, come on. The swing factor to me is Enda Curran reporting on Hong Kong, on Chongqing. I hope I'm pronouncing that right. Excuse me if I did not. Seriously, 800 miles northwest of Hong Kong. To me, that has more to do with the oil noise than anything else.
Yeah, but this is all rumor and speculation. How do people get a sense of this? And I understand that, but my point is this is what people are trying to game out in some kind of material way, and there's no way.
God, Lisa lets the family secrets out. We were in a meeting, folks. This is like 18 years ago, and they're like, Tom, we can't call the show Bloomberg Rumor and Speculation.
I think we should. RNS.
It was shortlisted, but it didn't make it there. This is not Bloomberg Rumor and Speculation.
Sometimes it is.
Futures up 8. It's Bloomberg Surveillance. Stephen Shorrock, radio and TV next. Must listen for your heating bill in February. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. U.S. prosecutors had begun an investigation of FTX months before the crypto exchange collapsed. Bloomberg's learned that prosecutors in New York had started poking into FTX's massive exchange operations. It was part of a sweeping examination of cryptocurrency platforms with U.S. and offshore arms. The World Health Organization warns that millions of lives are at risk in Ukraine this winter. The UN agency cites damaged or destroyed infrastructure that has left 10 million people without power. That's about 1/4 of Ukraine's population. China reportedly is set to fine Jack Ma's Ant Group more than $1 billion. According to Reuters, that would pave the way for the end of a regulatory overhaul of the fintech firm. Beijing's crackdown on the private sector included the halt of Ant's massive IPO in 2020. Tesla is changing its marketing approach in China. That's in the face of fierce competition from domestic rivals and uneven demand. Tesla is now extending insurance subsidies of up to $1,100 for new buyers. Plus, it's even advertised on local shopping channel. Last month, Tesla cut prices in China for the first time in 15 months. Billionaire investor Carl Icahn holds a large short position in GameStop. Bloomberg has learned that Icahn began shorting the video game retailer during the height of the meme stock frenzy. That was around January 2021. Shares have lost 71% of their value since then. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
We're not so negative about the downsides from here. We just think there'll be more volatility and a trend towards a lower market level before we get that trough. The reason we're not quite so negative is because there are some positives. We do think that the US economy will avoid a hard landing.
Peter Oppenheimer, Chief Global Equity Strategist at Goldman Sachs, in an interview with Lisa Abramowicz with Worldwide Headlines yesterday. Really, really interesting on his tentativeness of getting into 2023. We're not going to waste any time here. John Farrell keyed for Denmark, Tunisia. He is on assignment. We're unsure when Mr. Farrell will be returning. Bramo and I are here because we don't care. And here on a Tuesday with futures up 8. Here's what you need to know. Zydeco Pipeline was a phenomenal song by Aaron Neville years ago. Daniel Lenoir produced it down in New Orleans, and it is a key oil pipeline along the Gulf of Mexico. It is the focus now of our next guest. Stephen Shorrock is principal of narrowness and acuity on the hydrocarbon market at Shorrock Group. Stephen, let me summarize for our audience. We're up to our eyeballs in petroleum, and the price is going to go down. Do I have that right?
Well, in the near term, we certainly are a risk to the downside. So we had the market that switched into contango. This is the NYMEX WTI crude oil market. Contango meaning that the price this month is cheaper than the price next month. That occurred on yesterday's expiration in the December contract. Why are we in contango? Well, simply because, to your point, the Zydeco pipeline, which is a significant pipeline that takes oil from the shale patch in West Texas that's being produced and takes it to the export market in Houston. Well, there's maintenance now that's going to last well into December on that pipeline.
Right.
So your oil flows are lower, but you're still producing oil in West Texas. So if you can't move it into Houston, you have to put it somewhere. And it's very important as far as the NYMEX is concerned, because where that something is going to be is up at the NYMEX terminal complex up in Cushing, Oklahoma. So we're looking at a situation where we're going to be building supplies at the NYMEX terminal complex over the next 4 weeks.
The surprise to me, Stephen, as an amateur, is West Texas Intermediate breaches $70. We get a 69 print on American oil. Is that in your realm of possibility?
Excuse me, yes, with regard to, now this was one of our more bearish cases. This is really at the tail end of our modeling of where we could go. But certainly I do expect to see oil find a base here, assuming we do not go into a significant recession. And we have to keep in mind, this is the Biden put, right? This is the level, $70 oil in the low 70s that the White House has said. This is the level we're going to start buying oil to refill the SPR. So if you're sitting there, why would you sell $70 oil when the United States government's going to come in and start buying 200 million barrels at that price? So there, in effect, without recession, is your floor in the market, Tom.
So what about the ceiling, right? Because we were talking about the tight market about, 2 minutes ago, and we were talking about how oil prices were going to rise beyond $120 a barrel on certainly Brent and close to that on WTI. What's changed so materially in the physical market to make that completely an obsolete argument?
Yeah, well, excuse me, absolutely. So the 100 to 130, which is where we were in the first quarter, second quarter of last year, that's unattainable. That to say that we can get back up there, but we can't stay there because that's where we saw the demand destruction. So that is short of something catastrophic happening in supply in the market. That market cannot go up and beyond that. So what has changed now, of course, is the weakening economies around the globe. So it is a near-term bearish picture at this point. As we said, the Russians are front-running the price cap, so they've dumped a lot of oil on the market. The refineries in Europe, fearful of that price cap, have bought all that oil. So you're having a hard time now selling physical oil. So a lot of this physical oil is getting rolled forward into the first quarter, which is going to keep the market supplied. And the fear now, of course, is COVID with China. Right. When is that economy finally going to reopen? There is some optimism that it can reopen fully by next summer, but there's still a lot of skepticism in that. So without that demand in the market, you've got this lowest scenario of oil prices. I think in that low 70, low 80, I think this is the bottom of the market. And therefore, we're waiting for the demand because we think about this, CapEx is challenged. Interest rates are moving higher. Your hurdle rates for CapEx are that much higher. So you're still looking at a market that's going to be a dearth of capital, which is not going to go, of course, obviously into bringing more oil to the market. So your long-term picture is still bullish. That still gets you back to that $100 range, but we just have to get over these short-term hurdles.
Could you foresee a time where you see the price of gasoline go down and the price of diesel stay high and even go higher?
Well, that's the new dynamic that we're in, Lisa, because right here in my hometown, Philadelphia, the once great epicenter of the East Coast refinery, we've lost 55% of our refinery capacity. So 3 years ago, we had a refinery in South Philly that produced or processed 330,000 barrels of crude oil a day. That was a lot of gasoline, a lot of distillate fuel that went right into our home market here in Philly. And then, of course, 90 miles up the Jersey Turnpike into Linden, New Jersey in the New York Harbor market. We no longer have that. So that diesel fuel has to come from somewhere. And keeping in mind that gasoline is your best margin for a refiner. So this is where they maximize. So this is where you bring more gasoline to the market at the expense of distillate fuel, diesel fuel. So Steve, now we have to, yes, I'm sorry.
This is so important socially, Stephen Shorkin. You've been so dead on this. If we affect a shortage of heating whatever fuel in New England and the greater Northeast, how do you perceive a government response of this? I mean, what is the linkage of not in my backyard to government regulation, investment, incentives to fix this problem?
Well, the short-term fix is for this winter is the Northeast Heating Oil Reserve, which you have 2 million barrels of heating oil sitting in tanks up in Connecticut, and Rhode Island, Massachusetts, and you also have that for gasoline too. So that isn't infected, and I'm surprised we haven't seen that yet, because here in Philadelphia, 45 minutes up the Northeast Extension, Allentown was out of diesel. They closed down one of their gas stations up there because they were out of diesel fuel. So we are running shortages into this market.
Okay,
so that
but
is your
Stephen,
short-term fix.
Again,
Yes.
I don't mean to interrupt. I was in Paris, and on the way out to CDG, there were lines I've never seen waiting for a gallon of gas. Are you predicting that for Allentown or for Albany, New York?
Well, certainly that is the risk. I think gasoline, we're going to be, we'll get through this because that's where the price incentive is. But with diesel fuel, we're already running shortages, and that was shortages, Tom, before we even had any sort of heating demand in the market. So we're looking at the Northeast, the Mid-Atlantic, New England markets that are 70% of the homes or the market heats with heating oil. So that is an absolute risk. That will continue all through the cold months.
Absolutely brilliant here. The Shork Report, folks. I can't say enough about it. Yeah, I've got the emails. No, we protect the copyright of all of our guests. See Stephen Shork of the Short Group for 5 pages every day of shocking acuity on the hydrocarbon market. Lisa, we come out of Paris. You go northeast. It's like 4 in the morning or whatever. We're getting United out. And the lines I saw were different. They were all trucks. It was all diesel lined up for miles at gas stations.
And we staved it off now, but could you see that in a couple months' time?
Well, Shork's saying possible, I guess is how I would frame that. It's possible futures advance up 9 points. Stay with us. This is Bloomberg.
Stocks can still lag from here, and it's not going to express itself regardless of what we're doing on the quantitative tightening in the bond market.
I think we, just like the rest of the market, are looking for a pivot to the next big trend.
2022 was essentially one big trade.
We're going to morph our concerns away from inflation. Prices will stabilize, and then we'll be thinking more about the recession.
I think 23 will probably be a rather muted total return year, but I still think equities will do better than bonds.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Treading water to Turkey Day, World Cup in the background. Welcome back. This is Bloomberg Surveillance. Tom Keene, Jonathan Ferro, Lisa Abramowicz on this day with a holiday-shortened week. It is a quiet week, except that it's not. And we've been talking about this all week. We get the 2023 outlooks. We also have some key data coming out tomorrow, including consumer sentiment.
Well, it's a data dump. I mean, basically, am I right in that we're squeezing Wednesday, Thursday, and even Friday into one day?
Exactly. Tomorrow is going to be the day on a week.
Confidence.
Right. That's actually what I'm most interested about, especially in light of what we were talking about with 20% inflation at the Thanksgiving table and people going out. How much is the conversation around the table not going to be Bitcoin, not going to be how do you get rich quick? How do you just basically survive in an environment that's really the tightening of the screws?
Yeah, futures advance. We'll get to the data check on that, but let's rip up the script here. Michigan is something that's just sort of tossed out. People look at it, people don't. Lisa, the 5 to 10 year inflation statistic, nobody pays attention to this. 3%.
Hold on
That's not what Jerome Powell wants.
Jerome Powell specifically has said they pay really close attention to this and they care very much with the 5 to 10%, 5 to 10 year inflation. Well, we're not there yet, right? We've seen it kind of fluctuate back and forth. But what if you start to see it go up? What then? How does the Fed respond? What if you see sentiment plunge even more? Does that actually give? Hold on a second. But does that actually give the Fed a little bit of not comfort, but a sense that they can pull back? Right. This is the reason why, on the margins, this might matter quite a bit at a time when people are gathering around and kind of resetting. That's usually what happens during the holidays.
I'm going to reset. We reset for leftovers on Thanksgiving. I'm going to reset to the new home sales statistics at 10 o'clock on the 23rd tomorrow as well. But what we're really going to do is reset into that inflation report and the labor report, all of a sudden important first week of December.
How much can you actually start to see a labor market loosen up a little bit, right? They've wanted to see this, and we really haven't seen this yet. You talked about this, Tom, and I think it's an important point. Tech jobs is that the tip of the iceberg? Is that an idiosyncratic story, or is this, something that is a tea leaf for what's to come?
Yeah, well, Ben Laidler was brilliant on this morning, and he was absolutely heated. The tech angst is way overdone. He says, look, Amazon is exiting 1%, maybe a little bit more of their employees, and they're hiring in key areas while they lay off people.
Yeah.
I have real trouble carrying the text angst over to the greater economy.
And talking about angst, we are seeing more shutdowns over in China, and it's not feeding through. Hold on a second, but it's not feeding through to markets because you are seeing a bit of a lift. You're seeing the NASDAQ up nearly 0.4%. The S&P, it's a little bit of a, no, but hold on a second. This is a little bit of a lift. And how much is it despite the negativity that you heard out of China, despite the fact that there's a bit of cold weather in Europe? There's a sense that people are kind of pushing fast past these things.
Yeah, I would mention 88.77 on Brent crude. Stephen Shork moments ago. Look for the Shork interview in its entirety out on digital. Maybe it'll get out on YouTube. $88.78 on Brent crude. I mean, I hung on every word that Mr. Shork said. There was a clinic on oil up to our eyeballs. Could you get under $70 a barrel? West Texas Intermediate up to the legitimate angst. I believe he said Allentown, Pennsylvania, with a dearth of diesel fuel this morning.
And we heard the OECD earlier this morning talking about the energy crisis really fueling a lot of what we've seen in terms of the inflation. On the yield space, you are seeing it come in just a touch, although still very deeply inverted yield curve. We haven't talked about this, but the gap between 2s and 10s is still staying around the lowest, going back the most negative since 1981, to give you a sense.
Well, we're going to recalibrate. Why don't you bring in Mr. Quinlan here? I'm sure he's done this before.
He's done this before.
He's looked to a new year before.
Joe Quinlan, head of CIO market strategy at Merrill and Bank of America Private Bank, joining us now. Joe, how do you recalibrate for next year given the complete lack of clarity?
Well, it's going to be tough heading into the new year, Lisa. We're looking at a recession here in the United States, shallow, first half of next year. Europe, I think, is already in recession, and China's flatlining. That's around 65% of world GDP. So it's a choppy market into 23. But we do think on the other side, say second quarter, third quarter of next year, we're going to be buyers of equities. We're going to reset here in the United States. We'll lead the way. But it's a chop and a churn as we go through the central bank tightening, pandemic in China, and recession energy related in Europe. So it's very choppy.
How much does that really hinge, that sort of bullish call in the second half of next year, hinge on a quick deterioration in the economy and a quick response from central bankers?
Well, I think we're seeing the downturn in the economy. And I think if the Fed just pauses in January and February, not necessarily have to cut, that's kind of the green light for the equities to kind of to rebuild, put that base in for the next bull market. So they don't have to start cutting. I don't think they're going to be cutting anytime soon, but just a pause, let the medicine work, see how quantitative tightening is working its way through the economy, how the consumer's hanging in there. You talk about the labor market for sure. So I think we just need a pause to kind of build the bottom for the bull market.
Joe, the pause is there, and it hinges on inflation. OECD came out with an inflation call today where global inflation next year, again with all the angst in Europe, is 6.8%. Let's be optimistic. It's lower in America. I think we can do that, and Bank of America, no doubt, would lead on that. Michael Gapin and the rest. Joe Quinlan, does inflation actually come down enough next year in America?
I think it does, Tom. I really do, because you're going to see the productivity gains come back. You're seeing the economy weaken. Commodity prices have rolled over. When you talk to kind of the people in the energy patch materials, their costs are, their material costs are coming down. So I think I'm not in the deflation camp, this hard landing when it comes to having prices come down hard. But I do think we're headed in the right direction. And Europe, by the way, is going higher, as you mentioned, and Japan could be an outlier as well. So I think inflation comes down significantly enough next year that it gives the Fed pause and the markets a lift to look forward into deeper into 23 and 24.
Well, okay, we get a pause and then we lift. Is it a lift with quality? I mean, Joe Quinlan, you've been known for decades with a comfort in quality ownership. Define what that is. Is it a free cash flow analysis? Is it a persistency of revenue analysis?
It's going to be core competencies, Tom. It's going to be brands. It's going to be good management. I think it's going to be the global breadth that matters as well. When the Fed is done raising rates, the dollar is going to peak roll over. So multinationals will have their day again, so to speak. We're looking for a second half recovery in Europe. Europe's a big market for U.S. multinationals. Reflation in China and the rest of Asia is going to help drive. So we're looking for large cap quality names to push ahead, whether it's healthcare, technology, financials, materials, industrials in particular. You know, Tom, we got a big story out there that we're not ready to talk about, and that's the rebuild of Ukraine. Now, it's too early to talk about that given what's happening there, but that's going to be very important for U.S. industrial.
Okay, well,
European
let's
industrial.
rip up the script here because this is hugely important. Folkets Landau over at Deutsche Bank agrees with you as well. I get that for Europe. I get it for Germany, etc. How does the rebuild of Ukraine assist our viewers and listeners in America?
Well, remember, because U.S. corporations, they're more ingrained in Europe than they are here in the United States. You know, Caterpillar, Deere, big material companies, they have the plants already over in Europe, and they'll be right there on the front lines to help rebuild. So it's not like we're going to be exporting Caterpillar machinery. We're going to make it in Europe and send it right across the border. So U.S. companies are very well positioned to tap into that future demand coming out of the heart of Europe.
There's a lot of time before then. And as we look out to next year, one consensus has been a shallow recession. I know that that's what you were talking about as well. How do we know that a shallow recession isn't a new transitory?
That's a good question, Lisa, and we won't know until afterwards. But here's what I tell clients. You know, recessions, they're not, you know, we've had them before. They're not terminal. Here in the United States, recessions typically cleanse. We get, you know, we kind of shoot the zombies. We get the weaker players go under, the stronger players get stronger. Creative destruction. I mean, that's what's going to happen. So we're not going to know if it's shallow or not. And we do think it is because going into the recession, households are in good shape, relatively speaking, for corporations, housing markets rolled over. We know that. So this is a recession that's well telegraphed and we're well prepared for. So that's kind of the backdrop for quote unquote shallow.
Joe Quinlan, thank you so much. Greatly appreciated. Of Merrill, Bank of America Private Bank as well. And we'll get all the different views from Bank of America here. As we do from all the other firms. I mean, you know, we make jokes about it, but this is really serious stuff. And particularly after this absolutely unique year, how do you recalibrate in the next year? I have no, you know, I get page 1 and page 2. As Peter Lynch would say, what do you write on page 40?
Well, right now, page 1 and page 2, there are a couple of themes that have emerged. Page 1, buy bonds, buy long-term U.S. Treasuries.
Yes,
that's number one.
I agree with that.
Number 2, we're going to see peak dollars some point next year. These are some of the consensus trades that people are talking about.
Years.
Correct. A lot of these have been wrong for a long time, right? The other potential consensus that you're starting to see around the edges is China being a potential outperformer just because of how much bad news has been baked in. These are some of the things. And shallow recession is also consensus, and that's also a question about whether that's actually achievable.
And that's always hazardous. I have trouble with that. What I will say, and I say this with a lot of force, corporations will adjust. They will adapt. You saw this with Disney yesterday. What's day 2 on Disney? I mean, he wrote a memo to the employees. What's he do? Go to Disneyland and enter the Magic Kingdom and do a photo shoot? I mean, you know,
well, there are a lot of questions here in terms of streaming strategy, in terms of what?
The teacups at Disneyland in Anaheim is so much better than Orlando. Do you agree?
I have never been to Disneyland. I was at Disney World when I was 5, and I still couldn't do the teacups.
No,
I get motion sickness.
You just fall apart with the teacups.
Yeah, I don't really understand.
It's like what Walt wanted.
But you like the teacups? You like just spinning around?
I did a show once with a teacup spinning around. It was great.
Is that the other name of Bloomberg Surveillance? Spinning teacups on Bloomberg.
Teacups are great.
Really?
Futures up 14. We're advancing. Dow futures up, John, 110. Great. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Digital asset brokerage Genesis is warning potential investors it may have to file for bankruptcy unless it can raise money. Bloomberg's learned the firm is struggling to attract funding for its lending unit, which suspended withdrawals after the collapse of FTX. Genesis has spent the last few days seeking at least $1 billion in new capital. In China, an increase in COVID cases has led local authorities into reintroducing measures like expanding testing and lockdowns. It's now estimated that 1/5 of the country's economy has been affected. That's despite the central government's call for more targeted, less disruptive COVID-0 measures. The European Union's executive is designing an emergency natural gas price cap. It's trying to avoid the kind of record high seen in August without risking the security of supplies. The European Commission will discuss the final shape of the so-called market correction mechanism today. Best Buy has surprised Wall Street with an upbeat outlook. The consumer electronics retailer raised its profit forecast even as U.S. shoppers cut back on spending on discretionary goods. Best Buy also said that comparable sales are now expected to fall only 10% this year, slightly better than the previous forecast. And Societe Generale has stepped up its effort to eclipse rival BNP Paribas in share trading. The French bank has agreed to merge large parts of its equity business with AllianceBernstein. The two will unite their cash equities trading and research under a joint venture. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
I don't see a sort of self-fulfilling or self-perpetuating wage price spiral. And if you think we're going into recession, as I think we are going into not only a European but also US and global recession, that's very negative in all sorts of ways. And sadly, people are going to be losing their jobs on the back of that. But we know from experience that does bring inflation down. Inflation is going to be coming down.
David Riley, huge value yesterday, chief investment strategist, Blue Bay Asset Management. His comments on England were also important as well. They tee off here. England in the U.S., I think it's on Friday.
Yeah, it's on Friday.
John wants me to come below 59th Street. I don't know. We'll see.
Well, I think that both of you will be enjoying
yourselves.
yourselves.
Mayor Adam may come with us.
Maybe you guys could phone in. You could call in.
Yeah, we'll
Zoom
call
in.
We can do a remote. That would be great. We'll have to see there. Right now we're watching Denmark, Tunisia, and they got to be sober. Don't you think it's got to be a totally different game after what the world just witnessed with the huge upset of Argentina?
I was going to say,
it's got to be a different game.
How much are we going to start to see the underdogs really start to make some inroads here? That's pretty incredible. Argentina was one of the leading candidates to win.
World Cup analysis here with Lisa Abramowicz and Tom Keene. It's a value add this morning as our futures up 17. A little bit of an
asking me.
Because I'm delaying to get to Isaac Boltanski. Isaac Boltanski with us, Ohio Wesleyan, which means he's encyclopedic on Ohio, which I'm told is one of 3 or 4 states that really, really matter in 2022 on to 2024. At BTIG Encyclopedic on the Inside the Beltway chat. Isaac, Ohio, how do you and Adapt adjust after what you saw in that Senate race?
Look, I'll tell you, I think there are many takeaways from election night, but one of the main ones for me, Tom, is neither Florida nor Ohio are purple states anymore. I think that we need to operate under the assessment that both of those are going red, and that really changes the electoral math for the next presidential election.
I strongly, strongly agree with you that the redder got redder and the bluer got bluer. What does it mean for a majority Republican House? How do they prosecute gridlock given the polarity that we learned about the first Tuesday of November?
Yeah, look, when we look at the composition of this new Congress, I think part of it is due to our primary system, right? And when you look at the House of Representatives, Tom, what I find interesting is roughly only 15% of those 435 seats were really competitive, which means that the rest of them were decided in the primaries. And frankly, that's not really good for governing. It's good for politics because both ends skew to the extreme, but it's not good for the actual governance of the country. And so that means we're going to have to look towards these deadlines. Once again, all of us have to focus on deadlines, whether it's spending or the debt ceiling, because those are the forcing mechanisms for legislating.
Meanwhile, we are looking at ongoing concern in the labor market, not with respect to layoffs, with respect to strikes. And I do want to bring this to you because I've seen a slew of notes and concern about this, a huge railway strike as the standoff kind of hardens with the Biden administration's outreach to them. How likely do you see some sort of stoppage in the rail system in the United States, given that this is really pervasive and it's gone on for months now?
Look, I'll tell you, there is real palpable concern in policy circles that we're going to have stoppages. And I would say this even, and doing my rounds on this, there's concern in policy circles that even you're going to start to see pressures in these marketplaces and ripple effects even before stoppages. And you have lots of folks around the country who are traveling, not to mention the goods and Christmas time and everything else that comes out of it. My contacts generally believe that Congress will be able to act here. There's a law called the Railway Labor Act, and that lets Congress come in to either impose a resolution based on what the president's emergency board submitted this past summer, or to basically punt and kick the can down the road to require operations as is for, say, 3 or 6 months. My sense is that you will get some movement closer to the deadline, in part because there's a Republican House, and that Republican House is not going to be nearly as friendly to some of these unions, and will most likely call for a reversion back to that plan in the summer, which was not as accommodating as some of the one-off union agreements we've seen since then.
There's a broader issue, Isaac. Earlier in the year, we talked a lot about the shift in power to labor, to the worker, to basically be able to demand higher pay, especially in light of the inflation. Right now, it's getting harder. We've talked about a bit of a loosening, a little bit greater slack in the labor market. From your vantage point, politically, is there also less willingness to allow labor to sort of gain the upper hand at a time when economic growth and, frankly, the mix of Congress has changed?
Yeah, so I think a great example when we think about this is the Biden administration's independent contractor rule, which came out and spooked some of the folks around these ride-sharing apps like Uber and Lyft, for example, or DoorDash. The Biden administration actually took a less aggressive stance in that rulemaking than some expected. Now, part of that's just due to the limits, but part of it's also they don't want to be responsible for driving up costs even further for the average consumer.
Isaac, very quickly here, we're running out of time, but I've got to go to this. There's Isaac Boltanski writing on something I never thought you'd write on, which is Congress doing something about targeted stablecoin. Are we actually going to get regulation to police this industry blow up?
So the simple answer, Tom, is we're not getting comprehensive reform anytime soon. The most that Congress can be expected to do with the crypto events of the past few weeks is to focus on something they kind of understand, which is stablecoins. Stablecoins look a little bit like money market funds, a little bit like deposit accounts. They get that, and that's something they can legislate on. The rest of it, I think that we are years away from a comprehensive legislative solution.
So instead of breaking the buck on a money market fund, you break the bit dog? Is that how this works? What is a stable coin?
Yeah, look, all that they are really pushing for, and they being Congress in this instance, is stability and transparency, ensuring that you have a one-to-one backing in these deals. That's it.
Okay, that sounds like my Thanksgiving dinner conversation, to stability and transparency. Isaac Boltanski, thank you so much. Been way too long at BTIG. Stablecoin, come on, Lisa.
It makes
like
sense.
The Doge.
I get it. Well, hold on a second. There basically is this concept like Tether, for example, that it's pegged to the dollar. So there's a sense that there's a direct relationship and there's some reserve. So it's not necessarily.
Worked out?
Well, you have seen it go below that, which is speculation that there is not enough in terms of what's been put aside to back it. And a lot of people push back on that. I don't know. These are big questions. It's unclear what's going to happen. It's unclear what the fallout is and how unique some of these crypto assets are from one another.
I think we're on our date calendar here at our world headquarters. Sonali Basak may darken the door with us here in this hour to give us an update on Stablecoin. I can't say this with a straight face. Stablecoin, the Doge. Sonali was leading on the Doge. She was into that big.
Yeah, my kids were too. They were really into Dogecoin.
Are you serious?
Yeah, they were.
You let them do that with your allowance?
No. Like it was based on a game that they played, and you could get Dogecoin. I mean, that was part of the whole thing. Was
why is that different than what we're going through right now?
I mean, the sort of money that they have online in the metaverse that also is having.
There's a pulse on a
issues.
Tuesday. Equities advanced. Futures up 4, 5, 6 have become S&P futures up a good 0.3%, up 14 points. VIX comes in 22.28. Stay with us. Dana Peterson, chief economist at Conference Board. Soon. Bloomberg Surveillance. Good morning. Bloomberg Surveillance, Lisa Abramowicz and Tom Keene, John Ferro on assignment this morning here. Futures advance up 13, Dow futures up 110. The VIX comes in fractionally. Oil's what Lisa and I are following, 89.10. Lisa, we may get a 90 print on Brent crude. That's not a small item.
It's amazing how much it's just gone from one side to another. It was below $85 yesterday for the first time since September. Blink and you'll miss the move in oil.
What we're going to do here, we got two guests in this section here. We're going to get to Dana Peterson with the conference board. Thrilled she could join us. But first with an update of the last 60 minutes on Stablecoin. The unstable Shonali Bassick joins us now. What have you done the last hour and 15 minutes? Give us a window into the life of Bitcoin at Bloomberg.
Well, first of all, we reported that Genesis may seek bankruptcy if they can't find the money they need. They are still talking to folks across Wall Street who are getting a very intimate view into what the balance sheet looks like. So how do you finance the crypto ecosystem? You were asking about stablecoins. There's a whole other thing happening where there's dozens of private equity firms looking at ways to onboard into private equity funds using stablecoin, which I heard you guys talking earlier is essentially backed one-to-one to the dollar or another fiat currency.
Are they looking to save Genesis, or not save, but are they looking to assist Genesis? Big, smart private equity money, big, smart hedge funds, and the major banks. Are they out there?
It's like
play?
anything else in distress. What do I get for my money? Can
I
buy
thought
it
that this
on the
morning.
cheap?
I mean, they don't do a Warren Buffett convertible preferred, do they?
Nothing's over till it's over. That's the reality in this situation. Bankruptcy is certainly a possibility here. And if that does happen, there are plenty of people on the line that want that to happen because then they recoup some money rather than lose it all. So you see with FTX, for example, they had nothing and now they have $1 billion.
So what's the oxygen? What's the oxygen between stable coins and things that were more established and used for some sort of substitute fiat currency and Bitcoin and some of the other crypto assets that don't have the same kind of ballast?
On one end of the spectrum, I hear you guys talk about this a lot with this SEC, the Securities and Exchange Commission, the war in the United States that exists between the SEC and tokenization, the FTT token, other tokens. Tokenization. So are these assets listed as securities or not? That is the big fight between Coinbase and the SEC and many others. Then you have stablecoins, which are essentially, as you say, one-to-one with certain more safe assets. You want to see the reserves here? That's a big thing that people are really finally coming to in this industry. We want to know what's backing every single asset here, but it should trade one-to-one with the dollar if it's a U.S. stablecoin.
What's your sense in terms of the next development here of contagion? If you say you're midway through or we're midway through whatever is happening in terms of this meltdown, what is the breadth of losses, the breadth of pain, the breadth of potential opportunity given the fact that so many institutions are interested?
We were talking about this yesterday on radio for a bit. When Mt. Gox failed after 2014, what you had was firms like Fortress come in and buying Bitcoin claims at hundreds of dollars. And if that was the case and Bitcoin flew past $10,000, you're still pretty rich. And so is this an opportunity here to buy assets on the cheap? Remember, some of these assets are purely cash. Some of these are loans. Some of them are tokens, which to your point here, without that regulatory clarity, people are concerned about.
So part of this is they're trying to buy Bitcoin because they believe at 16,000 it's a value?
There are certainly people who buy that. There's certainly people who come on this show that are trading it on the side that'll tell you that too.
What a
And we
morning.
all know
Shonali Bassick with us here till late tonight with her story with Lydia Bayhoud and our crypto team. Look for crypto on Bloomberg Television as well today. We migrate to something more stable, and that would be economics. Dana Peterson joins us of Wesleyan and University of Wisconsin economics at Madison, and thrilled that she could join us this morning. OECD came out with a big fancy report. Dana, yours is more important. How have you tweaked your view for next year on real GDP?
Well, we think that the economy is probably going to be flat next year, and that incorporates a couple of quarters of recession. Maybe the fourth quarter of this year is a little bit negative, but really most of the brunt we think will be in the first quarter of next year, minus 1.5%, and then second quarter, minus 0.4%, and then kind of a moderate increase in the back half of next year. So all folding up into pretty much, again, flat growth for the economy.
How do you respond to what the Conference Board has seen over the many decades of when inflation spikes up, as a general rule, it's stochastic and comes down with quite a plunge, with great rapidity? Do you buy that we could see that?
Well, when I look at the components of what's driving inflation right now, a lot of it's rents, right? And then the other aspects are services, non-housing services. But when you look at rents, they're really sticky and they tend to reflect what has already happened in the housing market. And we know that rents are difficult to come off because certainly people being pushed out of the new and existing home sales market, they're going to go into the rental market. So that means that we're probably going to have a period of time where rents are still going to continue to push up inflation.
Dana, how much do you buy this idea of a shallow recession?
Well, our own forecast suggests that, yes, the recession will be shallow. And indeed, along with that, you might not have a really big hit to the labor market. And a lot of that's a function of labor shortages. So if you have companies hoarding workers and still also hiring people, especially in those in-person services and other types of jobs where you physically have to be at work, that's going to support consumption. And so we may not have a really deep recession.
But that sort of is a bit of a bet on the fact that things will deteriorate quickly enough for the Fed to pause, for the lag effects to actually kick in and show us that there is some sort of active deceleration in inflation that gives the Fed confidence, right? I mean, without that, if there is momentum, how much does that really cast this idea of a shallow recession aside?
Well, I think the Fed is looking at the data, right? So already the housing market tends to react very quickly to interest rate hikes. And we're also starting to see consumers dial back their expectations for how many like durable goods they're going to purchase, especially things that need to be financed. So the Fed is already seeing some of that evidence, but certainly there are lags, and it's not clear how long those lags are. But I would suggest that the Fed, still has some way to go in terms of raising interest rates, but that those interest rate hikes are probably going to be smaller than what we've seen.
Dana, I'm fascinated, and again, this is the heritage of the Conference Board, which going back to 1947 has always aggregated our economics. Are we so polarized as a society of the haves and have-nots that you can't aggregate your macro analysis as the Conference Board has done for decades?
Well, I mean, the good news is that even though we do have aggregates, we also look at individual income groups, especially with our consumer confidence.
What do you see there?
Data. Well, the youngest and the oldest groups are, a little bit more disgruntled than the folks in the middle. And certainly people who are at the lower end of the income spectrum are being hit harder by inflation. So we can look at those details there.
I'm please, Lisa, pick it up.
Well, I'm actually wondering,
I'm just stunned there,
how much this has to do with home ownership, right? If the younger people are not able to get into homes and they're seeing their rents increase and it's absolutely prohibitive to go and buy a home for the first time because because mortgage rates are 7%, how much is that this distinguishing feature right now between the haves and the have-nots?
Well, it certainly is a distinguishing feature, but let's not forget during the pandemic, the biggest increase in home ownership was among the younger groups, right? The millennials, right? Because many of them, have children now, they have been able to get jobs and they've accumulated some savings. And certainly there were injections of cash from the fiscal stimulus. So that did help them, at least during the pandemic, those who got in there early to buy homes.
The millennials have their kids investing in Doge off their couch. I mean, that's how bad it is. Dana, I want to go back to what we're going to see here on the inflation guesstimate for December before the Fed meeting. Is that a mystery to you, or do you have some confidence in the Conference Board pick for what inflation will be before December 14th?
Well, we think that inflation is going to continue to ease. We probably reached a peak earlier this year. We're seeing food and energy prices come off, certainly in the last few months in terms of their contributions. And that's really important in terms of bringing down the aggregate level of inflation, and also things like utilities for people who, all the people who live in homes. But certainly we're concerned about, again, the rents and services prices continuing to rise and place upward pressure on inflation.
Dana Peterson, thank you so much. With the Conference Board, did she tell me I was disgruntled? I think that's what I heard there.
Well, I was just distracted. I did not let my kids put real money into Dogecoin, but they were really familiar with it from Roblox because I let them play a lot of video games.
16,000 exactly, up almost $400 on Bitcoin. I don't know what to make of it. It gets us, on radio, Matt Miller and Paul Sweeney will chime in, and then crypto on television this afternoon.
Conflating crypto and Bitcoin, I have learned, is perhaps a little bit of a faulty exercise.
I get a lot of mail on that.
And I think it's important to sort of highlight how much love we really do get. Coming up, we're going to talk about that love and also the road ahead as we try to chart something of a consensus into 2023. Barry Bannister of Stifel Nicholas, Nadia Lovell of UBS, Nuveen's Brian Nick, all joining us on the 9 a.m. show. Really, I'm curious how much people are looking to China as sort of the peripheral deciding factor, to your point earlier, Tom, not only with oil prices, but also global growth.
Oil up $1.73. Brent crude 89.17, going back up near 90 again. That's the back and forth that we've seen on oil today. Not much else going on. Yen with that move yesterday, 141, comes back a little bit with a stronger yen. Lisa, I do want to go to the 7-year auction. Seriously, we make jokes about it, folks, but actually I find the in-betweeny 7-year auction actually a lot more informative. Do we have auctions next week?
I think that is going to be on hold. I'm pretty sure. I will get that to you. I think that this week is the auction week. One thing that I'm watching, Abercrombie and Fitch, they did better than expected, which is surprising because you would think that marginal income would not go to your teenagers. But I'm just thinking that it's really interesting that the net sales came in ahead of what the expectations were. It highlights this point, this sort of bifurcated picture of retailer to retailer.
Over the years, has there been like 12 Abercrombie and Fitches? I think there's been like iteration of
Aeropostale, which still exists. Like, who are you thinking of?
I don't know. What do I know about that world?
I don't know. Glossier, and you were talking about what's the one where everything is too small?
Glossier, I think, has potential here. You look at the lines out of A&F. Look at the lines outside Sephora. There's the racket.
Oh, talk about a racket. But really good stuff.
We will see.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. U.S. prosecutors had begun an investigation of FTX months before the crypto exchange collapsed. Bloomberg's learned that prosecutors in New York had started poking into FTX's massive exchange operations. It was part of a sweeping examination of cryptocurrency platforms with U.S. and offshore arms. The World Health Organization warns that millions of lives are at risk in Ukraine this winter. The UN agency cites damaged or destroyed infrastructure that has left 10 million people without power. That's about 1/4 of Ukraine's population. Goldman Sachs is forecasting that the S&P 500 index and its earnings will see little change next year. The firm expects margins will contract due to upward cost pressures from wages, commodities, goods, and services. Goldman urged investors to own defensive sectors with low interest rate risk like healthcare and consumer staples. China reportedly is set to fine Jack Ma's Ant Group more than $1 billion. According to Reuters, that would pave the way for the end of a regulatory overhaul of the fintech firm. Beijing's crackdown on the private sector included the halt of Ant's massive IPO in 2020. And waiting times for Apple's most expensive iPhones are rising to what analysts say are record levels. And that's happening just as the holiday shopping season kicks off. According to Apple's website, U.S. customers who order today would get an iPhone 14 Pro delivered in New York on December 30th. The delays threaten to hurt sales and derail a rally in Apple stock. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
We're going through an inflection point right now. Like we saw earlier this summer, we're starting to see that shorter term signals and longer term signals are kind of at odds. And so I think we, just like the rest of the market, are looking for a pivot to the next big trend.
Catherine Kaminsky there with Alpha Simplex. A really great feedback from that yesterday on turtle trading, on trend following. Focus. She's up 40% this year, down from being up 55% or something like that. Doing better than good on the trends this year, even though it's been a tough number of weeks. At any other time, I would pick up on that right away with one B. Ritholtz, Barry Ritholtz, with Ritholtz Wealth Management, important books, and the wisdom of decades on how not to lose money. Of course, Masters in Business gets huge numbers for Bloomberg in the podcast world. Barry, we are going to stop now and this is without question my most important conversation of the week. You and I remember Executive Life is one example that in a 7% money world, they guaranteed 11% or 12%. There's always a yield hog out there permeating crypto. And I go to crypto.com, which is a sponsor of the World Cup in Qatar. We can get a calculated reward up to 14.5% per year on cryptos. We can get rewards, a stablecoin reward up to 8.5%. Barry, it's the same old shell game. It's too good to be true.
So I have a vivid recollection during the pre-financial crisis when the 10-year was yielding 2.5%, 3%, and the securitized subprime mortgage sellers were saying, this is just as safe as riskless treasuries, only it's paying 200 to 300 basis points more. And I have a very vivid recollection of saying to someone, either you are going to win a Nobel Prize in economics or go to jail. There's nothing in between. And that very quickly unraveled and proved to be true in the great financial crisis. It's amazing that it's not even 15 years later and people fell. Instead of 300 basis points, hey, we're going to give you 1,000 basis points more. Risk and reward are two sides of the same coin. 15% guaranteed in a 0% world, it's not just fantasy.
Even 8%.
Right. It's just outright. It's outright absurd.
The underlying on so much of that, with great homage to Mark Pittman, who was a fabulous reporter for Bloomberg with that idiocy of 2007 and 8. Barry Ritholtz, the underlying there was something called LIBOR, or maybe a spread, LIBOR OIS. The underlying here, I would respectfully suggest, is the price of Bitcoin. Is this catastrophe we're seeing hinged to the price of Bitcoin or hinged to something else?
It's not the price of Bitcoin. It's the growth of Bitcoin.
What do you mean by that? Unit growth?
The price growth. That we can guarantee you 15%, asterisk, look in the footnote, as long as Bitcoin is growing at 20% a year, which we know eventually comes to an end. It always does. It always has. It always will. So saying we're going to give you something guaranteed,
right?
But it's dependent on a highly volatile asset that has a long history of swinging up and down and going through these massive crypto winters. From day one, this was deeply flawed, but it appeals to people's sense of a magic money machine.
One of the magic things here, folks, is I don't manage money. Ritholtz does. Ritholtz has losses and gains. He has to justify every tick of the day. I take huge issue with media elites who go to billionaires and gazillionaires that got in on the floor, and even at 16,000 exactly, they're still in a profit mode. How do you perceive how much damage is out there? How many people have been run over by Bitcoin from 20,000 to 16,000, or dare I say if it breaks even lower?
So I think of Bitcoin and some of the other crypto as a single large cap stock. When Bitcoin was $3 trillion, what is it? An Apple and a half, 2 Amazons. It used to be 3 Facebooks. Now it's 6 Facebooks. Yeah. So it's not an asset class like fixed income or equities or real estate. It's a pretty narrow group with a very, very deep narrative that had a lot of very, very strong adherents. The problem is the narratives have all broken down. Right? DeFi, right? Decentralized finance turns out to be a fantasy, because when trouble comes, the first thing people say are, where are the regulators? Where's Congress?
I cut him
Who's
slack.
going to protect us?
Am I wrong to cut Gensler slack because of the it's not audited, it's not this, it's not that, and it's foreign, it's offshore? How do you regulate it?
The Securities Exchange Commission can regulate securities. How do you define Bitcoin as a security? It's an asset that trades, but is it a security under the legal definition that gives them authority over it? And arguably the reason Gensler hasn't wanted this in an ETF is there's no control, there's no audits, there's no ability to guarantee the safeguards of a trade the way we can with every single share of stock, pretty much every single bond that's out there. It's a very, very different regulatory environment because you have control. And the whole purpose of Bitcoin or other cryptocurrencies is decentralized, user-controlled, transparent, no need for regulators. And that turned out to be a fantasy.
Let's switch gears here for the last minute. Do your clients want to own equities into 2023, or are they scared stiff, petrified?
So we have done a very good job on educating our clients over the years not to think in terms of days, weeks, months, quarters, but years and decades. Our clients don't care about 2022 or 2023. They're much concerned.
Even your bond clients?
Absolutely. They're much more concerned about 2030, 2035, 2040.
Oh, come on. I'm not concerned about 2040. Ferro is, but yeah, okay, I've got the Austrian 98-year piece.
They're concerned about their retirement, their generational wealth transfer, their philanthropy. Things like that don't matter quarter to quarter, year to year. They matter over the arc of time. Any given year in the market can be plus 20%, minus 20%, or worse, but there has never been a 20-year run in U.S. history where equities have been negative, and very, very few 15-year runs. So we've had a huge decade from 2010 to 2020, and then 20 and 21 were massive. After those sort of gains, you look at this year, this annus horribilis, and you have to just say this is something that you have to accept occasionally some drawdowns. The difference between equities and crypto is equities are a future stream of income. It's a discounted cash flow, whereas crypto is you're just hoping the price goes higher, and that's very different.
Hate mail already coming in. Barry Ritholtz, successful again. Thank you so much. Master of Business, I can't say enough about it. He really downplays it. It's like, oh, shucks, yeah, I'm doing a podcast.
Boaz Weinstein this weekend, spectacular.
What's he say? What's his major theme?
He talks about the Fed. He talks about credit. He talks about not understanding where we are in the cycle and how costly of an era for traders that is.
And the cost there is a new risk-free rate. We'll talk to Ritholtz about that next time. This afternoon at 1 p.m., after our Genesis story this morning, Bloomberg Crypto. Jonathan Levin will be with Jeremy Allaire as well. Futures up 20. They advance. Bloomberg Surveillance.